Good morning, traders. Anthony Crudele here, and welcome to NinjaTrader Live. Joining me in studio is our senior economist, Tracy Shuchart. Good morning, Shai.
Good morning, all.
And as usual this week, joining us in studio is macro strategist Craig Shapiro. Good morning, Craig.
Good morning.
So overnight, everybody, and good morning, chat, of course. Hope everyone is doing well. Let's take a look at the markets. We've got ADP at 8:15, so we'll do a quick kind of rundown, see what's happening in the markets, talk some news, prep for ADP, because I think it's going to be market moving. Should be at least. S&P pretty much flat, up $9 this morning. Nasdaq's up 50. Russell's up 0.25%, up $6. Dow is down. I wrote this in my morning note. We continue to see divergence in the tape. It's not the cleanest tape, but it's not really a bearish tape, and I'll talk more about that later. I know we're talking about seasonality for September. We've been talking about it on here. You see people on X talk about it. Craig and I were saying this morning, again, that they can't go down. They must go up, and here we are. The market just, after that September push on the first day of the month, it's just been grinding back up. And a lot of that, I think, is because the bond market, look at 30-year. Did a 180. So ZB is up 12 ticks today, 114.30, back almost to the 115 handle. Goes from taking out August lows to coming right back up to the previous couple weeks highs. I think that's a big story. We'll talk more about that with the team here in a minute. Gold coming down this morning. I still think overall the trend is bullish. Gold ebbs and flows, man. It's down $30, 0.9%, big deal. Copper continues its slide. Silver down 1.25%. Platinum down 3.5%. So metals coming off a little bit today, coming into ADP. A little bit of dollar strength against global currencies. Nothing crazy, modestly. Crypto also starting to spill over again a little bit. Just struggling to get any sort of bid in crypto. But that's the landscape this morning. Shai, what do we got for news?
So we have ADP this morning at 8:15, which we'll go over. We had challenger job cuts out this morning. Earlier, we had 86,000, the highest for that month since 2020, which is August job cuts rise. It's of 13.3%. So that is showing that the labor market is slowing a bit. We also have Stephen Moran is going to be testifying in front of the Senate this today. And this is important because he's taking the place of Krugler, whose term ends. She quit unexpectedly. That term ends the 31st, but it does kind of call into question the Fed independence because this is obviously a Trump pick. So a lot of people will be watching this testimony to see exactly what he says. So that is important. And then I was absolutely redeemed. Thank you very much. We had an OPEC statement come out this morning.
We never doubted you. Never doubted you.
And said that they are not discussing a hike. Further increasing oil production is not on the agenda.
Yeah. And that was, if you guys don't know what that was, she's referring to the headline yesterday, or coming into yesterday. Today's Thursday, so maybe it was Tuesday you said that. To us where the crude. No, it was yesterday.
It was yesterday.
Yeah, it was yesterday. Yeah, weeks go by quickly. It's Thursday already. And of course, big lineup. We've got Danielle LaCalle coming up. He'll be on at the top of the hour, and then we've got Chris and then Stowe trading markets today. So a lot to talk about. But Craig, what caught your eye overnight?
Well, this week's all about jobs, right? I think it's a lot of data that we have. Yesterday we had JOLTS, which I think really set the tone for the recovery in markets, right? The market, I was under the impression we were going to be in this bad news is bad news type environment finally, because the pace of the labor market decelerating meant the Fed has been late, too slow, or too late as Trump calls Powell. But look, yesterday what we saw was on a weaker than expected JOLTS openings and a higher than expected JOLTS quit rate. The bond market rallied, which you would expect, but then stocks rallied in line with the bond market rally. It was led by Google and Apple based on some of that news yesterday. But even by the end of the day, IWMs are back to flat. So we'll see. We have ADP at 8:15, claims at 8:30, and then tomorrow with NFP. I still suspect that if we continue to see this labor market data decelerate, I don't know if equities are going to love it. I think that we can be moving into that transition where bad news becomes bad news because the Fed is actually cutting into an economy that needs it rather than an economy that doesn't need it. And I think that's the difference here. I think right now market participants believe the economy's fine and the Fed's cutting. But I think that data, my sense is the data starts to look a little bit worse, and it's going to be a little bit more of a problem.
Should I preview ADP for us today?
Right. So ADP is expected at plus 68,000 jobs. ADP is private payrolls from the company actual ADP. This is different from the BLS, which is government statistics, because the credibility of the BLS has kind of been in question.
Has it really?
I'm trying to say this nicely. A lot of people are looking at ADP as maybe more of an accurate tell of what's really going on, because their data is gathered and published like near real time because it's an employment company. So they're telling you how many people are added or subtracted from their payrolls. And whereas BLS lags because it's a survey collection. And also ADP excludes government jobs. And we know in a lot of reports, we have been seeing where government jobs really were the majority of non-farm payrolls. And so I think now ADP is becoming more and more important.
And what do you think about that?
Yeah, people had said that, or people had been noting that there's been a divergence between ADP and the BLS data for quite some time. And so, we weren't really using the ADP data as any guide for what was going to happen on Friday. But what we've seen this year is that ADP has been leading and has now been kind of proven correct. I mean, if you look back, ADP was at 147,000 in March, dropped to 60,000 in April, went to 29,000 in May, and that was negative in June of 23,000, bounced last month to 104, and now markets are looking for 68, so a fallback over. That big divergence with BLS after the revision now is confirmed. So I think if we get another soft print here from ADP, I think people will feel a little bit more confident that actually the labor market is decelerating as expected, and that tomorrow's number is probably going to look a fair bit worse. It's interesting. Volatility for today is about 4 or 5 points lower than it is for tomorrow. I think today's number is incredibly underpriced. I mean, if we get a big outlier today, I think the market's going to move much more aggressively today, whereas tomorrow is a little bit more hedged.
I mean, I can't disagree with that. I mean, remember the last time the ADP, but we were sitting here and we talked about it, and all of a sudden, I mean, we were watching as it came out, and it was a big mover compared to what unemployment was. Question for you, Craig, on the softer number situation, bond market, to me, I go back to the beginning of the month. You saw bonds selling off with stocks. That to me I said, okay, the fact that this is happening, dollar strength, modest strength, was something to note, right? And when the bonds are going down with equities, this goes back to what we did earlier in the year. Everyone probably forgets a little bit, but if you go back and look at the beginning of this year, when the market was going lower, what was going down? Bonds were going down quickly with equities. You see bonds take out a previous month's low, and they look like they could start to accelerate. I think equities looked at that, they paused and have now come back down. Now, I think part of that is probably because you think the numbers are going to come in softer, which is, like you said, kind of a bad news, good news situation. And we did get some good news out of Google, and I think there was some stuff with Meta as well that's driving prices higher. But what I'm trying to get at is that really going to be bearish for equities? I mean, if I see a bond market that's just stable and the Fed's cutting rates, am I really going to look at this? Because the equities seem to look past any sort of negative. Yeah. You know what I mean? So
yeah, look, I think we'll get back into maybe that K-shaped market again, where it's a recognition that the economy is slowing, but many of the big cap companies are still doing incredibly well. So I think in this environment, we may get that rotation back into tech again, like we talked about earlier in the week. And so you might have a situation where S&Ps and NASDAQ kind of maybe hold in together. Russell underperforms. Some of the more cyclicals underperform. I think it's interesting. Crude's been weak. Silver rolled over last night. Copper's been weak. China was weak last night. So maybe there's a little bit of that, okay, global growth momentum slowing. Weak momentum in the U.S. maybe is becoming more apparent. And so shift back into some of the more defensive areas of the market as the bond market stabilizes. And, big tech is defensive, more so than staples and utilities have been. So I could see that rotation continuing, if the numbers come in weak, sure.
Yeah, I mean, the other thing is, it's like, talking about the Russell's up again today. I said it yesterday when I looked at the chart on the daily of the Russell. I put some Russell in my long-term account yesterday, and I think that when I look at the Russell, the fact that the bonds have come back, that's why I said, you know what, add some Russell in my long-term. I've got a long-term swing account. I said, I bought some Russell, and I'll leave them in there. I got a pretty wide stop, but I look at it and go, technically it looks good. If rates can stay down right in this area on the long end, the short end, we think they're going down anyway, right? But ultimately, to me, you have a tape that goes from, looks like it's divergence, where all of a sudden, if rates are going to start coming down, I do think you're going to see some buyers probably step in and trade with the Russell a little bit. And like you said, the safety net is always the NASDAQ. So we could have a tape. Again, I'm just bullish. Again, when I look at things, they can't go down. And obviously today's number could totally derail that. But unless that number comes in and it really, let's talk about that, Shai. Where are we within line for ADP? Like, what would be a really, let's call it soft number, bad number?
So a bad number obviously would be anything less than 68,000, because that's pretty low, or a negative number, which would show a lot of weakness in the labor market. So I would be looking for kind of very outsized move for that. And then, of course, we could, if we get a surprise to the upside, I think markets will get a little worried that we're not going to get rate cuts that they want, because that would mean the labor market's not weakening as much as we thought. Or at least it would put more emphasis on VLS tomorrow.
Yeah, exactly. And then what do you think about that?
Yeah, I'm looking here at the range. The range is from 35,000 on the low side to 110,000 on the upside. So it kind of it's a pretty big range, and it kind of gets it matches that 70,000 payroll estimate. We're looking for June was negative. July was a bounce back up, and now we're talking about August coming back down again. We'll also be looking for the revisions in these ADP numbers to see if there's any momentum on that. We also get wage data from the ADP too, so that gives some forward-looking indicators for income growth and for consumer spending. So, but look, I think if we get clearly, I think if we get a negative print, there would be more concern that this labor market deterioration, which I think is starting to fester, is actually a bigger deal, because then you're getting kind of 2 months in a row of weaker than expected labor momentum into this seasonally weaker period. And we know that the government furloughs that happened earlier in the year kind of come off the docket, I think, as of the end of September, right? Anybody who was displaced by the Doge committee, they couldn't file for unemployment for 6 months. We know that's coming for the fourth quarter. Yep. So claims are going to start kind of moving up seasonally. That's the type of momentum, I think, where you could start changing the narrative about what lower yields means, right? Right now, market's been very comfortable that lower yields is good for risk, regardless of why we're getting lower yields.
Exactly.
If that narrative shifts to we're getting lower yields because we need lower yields, then I think that the risk appetite for owning kind of all stocks then changes. Then people start to think about the recessionary, a growth slowdown, modified recessionary environment for the fourth quarter. That, I think, changes things.
I think that's spot on, because that goes back to where I said, if the number is a little weak and bond markets just stay where they are, or good a little bit, I just think equities continue to go higher. Again, because I look at the way the low is made. First day of the month, they try to push them down. They can't get, NASDAQ goes back down, tests previous month's low, and just comes right back up. I mean, almost effortlessly, right? And it's just like, people trying to sell the rallies. Like, I watch, just each little kind of uptick, and you get these little moves, and you're just like, again, there's just no momentum to the sellers, right? They have a chance, they have a window, it doesn't work, and it just grinds right back up. I mean, this tape is, we've talked about it before, trying to push that ball in the pool as a kid, yeah. And no matter what, it comes back up. You might get it near the bottom, but if it doesn't pop or something happens, it comes right back up. And that's just what I see. And again, I will have the bond market up on the data today, because I want to see what happens in the bonds first. Bonds are sitting on their overnight highs right there. And so we'll see. We're less than a minute away from that number. 15 seconds.
15 seconds. 15 seconds. So that should be coming out just shortly.
I love these quiet moments.
I know, right? The liquidity sucked from the market. 54,000. So below expectation of 68,000. And it looks like
Last month revised modestly higher to 106 from 104.
So that's really not much.
Yeah.
So, Craig, initial thoughts? Like, I mean, what are you thinking?
Yeah, it's kind of a kind of quiet reaction, but I think it's more evidence that there's some negative, momentum, right? We're going from 106 to 54, and then we know the next month the uncertainty's still there, the tariffs are still top of mind. I suspect that negative momentum for payrolls is going to continue. I think, the Fed's rate cut in September is locked in. 25 basis points. If the number tomorrow is a complete disaster, then is 50 basis points a potential? Sure, right? I mean, I think, it's an interesting game theory perspective with the administration here and the new data. Do they want to have a kitchen sink type quarter, a kitchen sink type month tomorrow, announce a really bad print so it kind of locks in a bigger than expected rate cut and says, look, this is just, this isn't my fault. This is just bad data, and Trump tries to blame it on the old guy or whatever? Or does he say, actually, the economy is, still strong and jobs are being created, right? He has a little bit of a narrative issue, right? He likes to talk about how great the economy is, but he needs the economy to be weaker in order to justify the rate cuts. So what's the game theory from if the data is really manipulated, which I don't really think it is, but if there is some political pull here, do they want to show a bigger than expected slowdown in order to get a bigger than expected rate cut? I think there's a possibility of that, sure.
Yep. My initial thoughts are always, what are the reactions I'm seeing across the board? Bond market was just a shimmy shake, right? Let's see if we could squeeze a couple people that are short out, and then, they make a higher high, and then they come right back in it, as you can see here with CB. Not much else really to talk about. I mean, Euro had a little bit of a bounce. You had the dollar sell off quickly and then come right back to where they were. We go to S&P. I mean, you wouldn't even know what happened if you look at the S&P. If you go to the NASDAQ, a similar situation. Nothing really went on there. Russell, same thing. It's obviously eyes are going to be going towards tomorrow now. Shai, real quick, what were your thoughts initially on this number? And then maybe we'll talk about a couple other things.
Again, we're seeing services had the most ads compared to goods producing. But, I think it's soft, but it's not an oh no, we went negative, or we went too high. I think it's kind of still in line, even though it's less softer than expected. I see why the market probably didn't really react that much on it.
Got it.
I mean, we have like a slowly slowing economy, not a rapidly slowing economy, right? And if we have a slowly economy where the Fed is going to provide accommodation, the market feels comfortable about that. It's like, okay, the Fed's got this now. It's not going to let it out of control. It's not out of control already, and now we know rate cuts are coming. And if we continue to have this glide path of slowdown, Fed's going to cut 25 in September, maybe again in October, maybe again in December, and they have everything under control. If there becomes more evidence that that slowdown is accelerating, then maybe we start to get concerned that the Fed is late and too slow. But so far, we haven't really seen that. But tomorrow will be a big data point in that regard. Next week, we get the revisions for the prior 6 months. That comes out on the 9th.
Yep.
So that's a big data point also from the payroll perspective, because we just had that negative revision last month. But now we'll go back and look at the prior aggregated 6 months and say, okay, how much have we been overstating the jobs? I think there is risk that the administration really would look to see that number come down a lot and kind of blame the old economy, blame the Biden economy, blame the first 3 to 6 months of a slowdown as this transition from public to private sector growth. So I think there's some big risk that revision looks pretty bad. And then towards the tail end of next week, then we get inflation data, which is likely to be firm. So if we have firm inflation data and a slowing labor market, that stagflationary environment, that's the trouble spot for the Fed, right? Because then the Fed doesn't know how quickly they could cut. Are they cutting into a reaccelerating inflationary environment? Waller was on TV yesterday on CNBC talking about the transitory impacts of tariffs. I mean, God forbid we're using that word again, but he was very comfortable to bring that back out. So that's going to be the discussion at the Fed meeting in 2 weeks: is how appropriate is it to be cutting, and how aggressively should we be cutting when inflation is actually sticky and possibly reaccelerating?
Yep. I mean, my initial take again is it's kind of that sweet spot area. I'm an equity index trader, so I've been, my whole career. I always look at the reactions more than anything, and hearing you guys understand what's happening behind the scenes here, it's like, I think you nailed it. It's exactly what it is. It's a slowly, what was it?
I said slow. I was slowly slowing economy.
Slowly slowing economy.
And again, I just wanted to add that number in the ninth is going to be very important, because if you remember last year when we had the ninth, now that's not the final number. The final number comes out in February of the revision for the whole year, but it's a big tell. And last year we came out and it was, over 559,000 jobs to the downside that they had overstated. So that number on the ninth is going to be very important as well.
Yeah, no doubt.
We also we have more data this morning, right? We do get.
If you want to, we can put up the data.
Yeah, let's put up
I know
the data.
we did that earlier for a second.
Let's put the data up again.
We'll go
round two of data if we can.
We'll go through the data again.
We'll see.
So we have jobless claims. Okay. So we have jobless claims and continuing claims still at 8:30. We have trade balance, imports and exports at 9:45. We have services PMI, that'll be important at 10, ISM services, and then 10:30 we have gas storage, and at 11 is crude inventories. I forgot yesterday we had a holiday on Monday, so that has moved to today.
Got it.
What you get through the first week of any month is you get this crescendo of labor data, right? It starts with JOLTS, it goes to ADP, it goes to claims, and then actually at 10 o'clock with the services employment component of that is often seen as another barometer or leading indicator for what the NFP is going to look like. Market's looking for 46.7 for that employment indicator of services. We'll have to watch that. If we see some weakness there, that could be a harbinger for what tomorrow might look like. And then the culmination is Friday payrolls, and then even this time around, now next week we get these revisions. So a ton of labor data for people to really kind of digest and say, man, how slow has this economy been over the last few months here with the labor data? We've been told it's been good, but really it doesn't look like it's been as strong as the administration or even the Fed had been thinking. Even the Beige Book, which came out yesterday too, talked about some slowing momentum in the labor market, in consumption. So again, you're right. There's been some nuggets of slowdown, but not enough to disrupt the liquidity story, not enough to disrupt the retail appetite. I was looking this morning, 17 of the last 20 weeks of retail inflows, 20 months in a row of positive retail inflows. So until we get more recognition of an accelerating slowdown, which we might not get, retail's they're not going to stop, right?
It goes back to nothing matters until it does, right? So like right now we're seeing the cracks, and that's what we, in the morning, and we have stuff to talk about, right? And we're looking into what the future may hold. And the reality is with markets, until the markets really feel like it's the story. And it's funny, we've all been doing this a long time. Many of you in chat have been doing this a long time. It's like you'll see these stories or these things that Craig and Shia bring up to us for periods of time. And then all of a sudden, one headline one day, where you're like, dude, I've known about, this has been going on, and then it comes all at once. And so, again, we're not saying that's going to happen, but understand, I think the hardest thing for retail day traders right now is this is a jam-packed week of data. This is really macro land right now. A lot of times I'll come in here and be like, guys, you don't even want to look at the bond market, and I'll tell everybody that. I'm hoping that comes through on the chat and people understand. But there are certain times, like right now, where this stuff's going to matter, and that's why equities are kind of in this holding pattern. Coming out of a really slow month in August, we come back into September, just like you said, jam-packed week of data. Then we've got Fed meeting, we've got inflation rollover.
Got a lot going on. Month.
The key traders out there, again, hopefully every morning you understand that we're trying to help you understand the market environment and know that right now it's not a time to really put your foot on the gas with any sort of things. And this goes down to really even the short-term day traders. Understand, pull things back a little bit. You're going to get a lot of shimmy shakes in this area. It's not going to be super clean. It's just not going to be.
No, and you have market participants coming back. You have portfolio rebalancing. You've got a lot going on this month, and so it should provide for day traders at least some opportunities.
Yeah. I mean, I've been doing this a long time, and I remember there was a time when I first started, I mean, I barely even looked at data. We used to see it on a board. It would be such small print, when I stood in the S&P pit, and it was like, oh, data's come out. We'd wait for it and so on and so forth. But honestly, each year that went by, I started understanding, like, we talk about seasonality for, like September and what that means for markets. But when you look at, like, there's periods of times where I go back and look at my stats and be like, why am I just struggling right now? Like, what's happening? Again, anytime I do an evaluation of myself, this is why I journaled for many years, is it me, is it the market environment, or is it my strategy? Right now, everybody understand your strategy is probably not going to be super clean and effective in this kind of tape. So you really have to be picky. And each day, you're going to see our traders come in throughout the day and trade, and they're very particular about what they're looking for. Obviously, they're mostly looking at technicals, but they understand the environment behind them. They're not coming in and getting aggressive. And I think I look at the tape today, you've got some divergence out there a little bit. Dow's a little bit weak. Russell, S&P, NASDAQ all up modestly. It's not going to be super clean. I want to get to a couple of things before LaCalle. So we haven't talked much about metals. Gold sell-off today. I go to you, or either one of you, who wants to start? Like, I just want to talk a little bit about the pullback and if there's anything kind of tied to it.
Just really quickly, we had a huge run for 2 days.
Yeah.
So to me, this market just taking a breather. I don't think there's anything to it. I think the metals markets are still relatively bullish, and I like to see these kind of pullbacks and these breathers rather than sort of these parabolic market moves where you see mean reversion.
Yeah, and when you go back, I talked about my old Bollinger Band. Boomer Bollinger Bands are coming back, baby. I always say, look at that previous peak. That's always a good area for them to stall. They basically stopped almost right on it, as I talked about. And again, I'm not short, so I'm not like talking this up or nothing, but I wouldn't be short this market. But when you look at this is what happens on these rotations. I've seen it over and over again. Not a surprise to see us pause here. Wouldn't be surprised to see a two-way tape. Probably going to be a volatile gold market into these numbers next week or so.
Yeah, I think one thing we've definitely seen this week is we've seen a good two-day move in bond volatility. The MOVE index has gone from 81 back up to 89, and gold volatility also has been spiking this week, this Bollinger Band expansion too. So it hasn't shown up really yet in equity vol, but typically when you get FX vol moving, when you get bond vol moving, when you get commodity vol moving, equity vol usually kind of picks up the rear there. So I think we're moving into a more volatile period here for September, which I think is going to provide excellent trading opportunities once we start to get this narrative more in a direct way. Are we slowing? Are we not? Is the Fed cutting? How aggressively? And I think that'll help set people up for trading for the rest of the month.
Yeah, and I think gold is a market where I've said big, small, or not at all. Like if I'm day trading gold, and I see a lot of more day traders coming into NinjaTrader trading gold. Gold is a market where you still have all of those things. So like pullback days, I wait for my strategy. I just say, give me a buy signal, and I get it, and those are aggressive to me long. Now, mind you, I hope the data isn't derailing that, but this is a time where I put risk on because you're finally getting an opportunity to buy a break. I don't think that you look at the gold pullback as like, oh, do we top? Because that's the psychology I think that gets you in trouble. You want to use the weakness to buy. And when you see weakness, hold, and support on strategies, I think gold is more of a market I'd be focused on than equity indexes. Coming up here in just a minute and a half, a quick preview shy of the next data.
Jobless claims. So we have initial claims. Our survey is 230. Prior was 229. And continuing claims, 1.959 million, prior 1.954 million. So survey is not expecting much of a change from the prior week. And we've been kind of in this range for weeks and weeks and weeks. Now, again, I've always said, I don't think markets are going to start getting really worried until we see like 350,000 or more. So
talk about that, Craig.
It's also, we have this because it was Labor Day too this week. So, some dodginess with the data from a seasonal point of view. But I agree. I mean, so far, claims have not broken out to the upside yet that I think would scare people. I mean, we are getting closer on continuing claims to getting to that 2 million, a week, which I think is from a psychological perspective may start to bother folks. But yeah, so far we haven't been seeing these layoffs accelerate. But now that we're back to school and we're back to work after Labor Day, well, the time is now to see how is this economy really rolling over or not.
Got it. Yeah, no, we're going to have Danielle LaCalle on next. We're going to stay here with the three of us, let the data come out. I'm going to pull the bond market up again, and then we'll bring in Danielle.
Still waiting.
Again, these quiet moments.
I know.
All
right, 237,000 expected was 230, and then 1.940 million expected 1.959 million. So slightly lower continuing claims, slightly higher initial claims, but certainly nothing that would start ringing any alarm bells.
Yeah, I mean, it's a 6-week high in initial claims. We've gone from a low of 217 in the middle of July to 237 now. The high this year was 250-ish. So, we're trending in that direction. But again, it's not that, oh my God, it's over type thing.
Yeah.
That's just kind of slow, methodical slowing. Initial reaction from futures kind of, again, nothing done.
Yeah.
So, seems like, we're on to tomorrow. Again, 10 o'clock, I think will be interesting. We'll watch that employment data point. But, today might be a little bit more of a quieter day into maybe some more volatility for tomorrow.
Yeah, slowly slowing. Say it 10 times fast.
Slowly.
Put it in chat. Say
Seashells by the seashore. What is it?
Yeah, exactly. Craig, great as usual this morning. Thank you so much.
Thanks, guys.
All right. Quick preview. Who we having on?
So we have Danielle LaCalle, who is the chief economist at Strategist, and everybody knows him on X, of course, and so excited to talk to him about the macro environment right now.
Let's bring him in.
Hi, how are you? Thanks
Danielle, good morning.
very much. Good morning. Thank you very much for inviting me. It's a great pleasure to be here.
I love having you on so much. Obviously, your macro content, and I said this to you last time, is I think some of the best in the business by far. I've been following you for many years, probably one of the longest people I've been following on X. But your positivity and the way that you come in with the energy, I love it. You make the business fun and interesting, and again, your commentary helping us not quite at your level, understand what's going on. So you heard us this morning probably a little bit. We had ADP came in a little bit soft. We kind of talked about it as kind of like that sweet spot. It's soft. It's not enough to be like, whoa, like what was that? But nonetheless soft. And then you just had jobless claims. Initial thoughts and reactions off this data.
I completely agree. I think that the jobs figures are showing a radical shift from what we saw at the same time last year, because it's basically coming from the private sector. Remember that last year, every month, we saw about a 50,000 increase in government jobs, which certainly, obviously, was creating a completely, I would say, a distorted view about the labor market. Now we're seeing government jobs coming down. And what I think we're going to continue to see, you've said it perfectly, is weakening but not breaking. It's the clear that the labor market is weakening. Small and medium enterprises continue to suffer from very elevated interest rates. But at the same time, the manufacturing sector seems to be gradually improving. All of the different sectors that actually lead economic growth, starting with technology as well, are actually doing relatively well. So I would say, is the labor market weakening? Absolutely. Is it the predecessor, or is it telling us that there's going to be a recession? No recession whatsoever in sight.
I want to stay on that thought just for a moment. So this morning we talked with Craig and Shai about, the reason why the Fed is cutting rates. Because if we're in a situation where, the Fed is cutting rates right now and the market is slowly slowing, I'll get that right. I don't think that the market takes it into too bad of consideration. But if things do start to escalate, kind of give us the landscape of how you see that with the Fed and what they would be doing to where the markets would then, as they're cutting rates, start to react maybe differently.
Yeah, I think that we need to separate those episodes in which the Fed reacts because they see an urgent need to cut rates. That is when they actually do see a recession. So that's when, for example, the market is expecting the Fed not to do anything with rates, and suddenly they reduce 75, 100 basis points. That's not the case. No, I think that to start with, I think that the problem with the Fed is that they ignore monetary aggregates and therefore they get it wrong all the time. But more importantly, I find it fascinating that the Fed doesn't even read their own beige book, because their beige book since May actually, has been telling us that the labor market is weakening, but not to a concerning level. So what do I think that we're going to see? It is very likely that the Fed cuts 25 basis points. I don't think that they will cut 50 basis points, probably because they don't want to show that they're bowing down to the demands of the Trump administration. And therefore, the market is going to take it positively because it'll see it as a logical step to normalization of rates to the neutral level. What ultimately all of this shows, anyhow, is that the Fed, or any central bank for that matter, should not be manipulating rates. That's the key element here. That it makes no sense to cut by 25 basis points when they're at the same time admitting that they're 100 basis points above the neutral level. So it's almost basically like not wanting to recognize that they were wrong about inflation, and at the same time not wanting to create a significant damage in the market. However, 25 basis points, 50 basis points will be taken positively by the market. And certainly, I don't think that there's going to be any message coming from the Fed that is going to spook markets in terms of perception that something is severely broken.
And I want to talk a little bit about, obviously we've seen gold soaring. We've seen kind of a global sell-off in the bond market. So what does this actually mean, really?
Yeah, it basically means that governments have surpassed the 3 limits that the governments have in terms of issuing debt a long time ago, but it's manifesting now in developed economies. The governments have 3 limits when it's time to issue debt. Number one is the economic limit, is when more debt doesn't mean more economic growth, and certainly not more productivity growth. The second is the fiscal limit, which is when interest expenses, despite central banks lowering rates, despite monetization of debt, interest expenses in the budget continue to soar and reach a very significant level, in some cases 20-25% of the budget. The third is the inflationary limit, is when that elevated level of government spending and massive money printing generates persistent inflation. Those 3 limits have been exceeded. And now what is happening is that the alleged poster boys of endless debt issuance, Japan, France, the UK, all of them are actually showing how long-term bond yields are soaring to all-time highs in a period in which they're living a fiscal stimulus, and they are at the same time having central banks cutting rates. So what does that all mean? It means that gold is telling us what is actually happening is monetary destruction, is the erosion of the purchasing power of the currency. Currency, obviously, everybody here knows it. Currency is debt, and debt is soaring, and everybody talks about issued debt. But I always say to my students and to everybody, forget about what's issued. That's already gone. What you need to talk is about the massive size of the iceberg below the sea. And that's the amount of committed but unfunded liabilities of governments. Those are especially high in the case of France, about 400% of GDP. In the case of Japan, it's about 500% of GDP. In the case of the UK, it's also close to 350% of GDP. So imagine the amount of monetary destruction that we have ahead. That's why, as you all have said when I was waiting to join this fantastic conversation, every time that you see gold with a little bit of a pullback, it's time to buy some more.
Yeah, obviously. And so what happens, everybody is convinced the Fed's going to lower rates, that's going to bring yields down, and everything's going to be solved. I guess all our problems are going to be solved. But last time, last year at this time when they did lower rates, we saw yields spike. And so do we run that risk again? And what does that mean?
Obviously, there is a debate out there about the fiscal policy of the Trump administration. I'll give you my view. Why did bond yields soar last year despite rate cuts? Because the Biden administration's policies were to massively increase government spending. The Biden administration increased government spending by $2 trillion above the so-called emergency spending of COVID. And because the expectations were that both the budgets or the economic programs of Kamala Harris and Donald Trump were going to increase the debt and the deficit either a lot or massively. However, what we're starting to see is a different picture right now. Is that number one, all these trade agreements that have been signed, the CBO projects that will reduce the deficit by $4 trillion to 2030. Okay, to 2035, sorry. Okay, so that's a big difference coming from what they expected in October to December. The second is that government spending is not rising, which is at least a positive. You may say that it should be cut more aggressively, but at least it is not rising. Therefore, the big difference that I think lies in markets versus 2024 is that we are going to see a Fed that will be cutting rates in an environment in which velocity of money is actually not increasing. The expectations and the reality of velocity of money in September, October 2024 were actually highly accelerating money velocity. And this is important because a lot of people do talk about money supply and money supply growth, but very few people talk about velocity of money as a very important factor of leading to persistent or higher inflation. And I think that the difference now is one, that it seems that the budget is likely to be more controlled than what many, or at least mainstream consensus expected. And at the same time, that velocity of money is not rising dramatically, and therefore the risk of inflation is more controlled. So I think that is what makes the difference. That this time the Fed would be cutting rates for a fundamental reason that you have mentioned very, very well, which is that the labor market is weakening, while in 2024. I am still wondering why I am not wondering it, but obviously there was absolutely zero fundamental reason for them to cut rates.
We only got a couple of minutes left, and I'm wondering what keeps you up at night? What worries you about what could happen in markets? I mean, there's always the underlying thing that we never know, but what are some things that you could potentially see brewing that concerns you about what could happen in the market?
What really worries me about markets right now is that after the warning signs of long-term dated bonds in Japan, in the UK, in France, if the Chinese government was to decide to undertake a massive yuan devaluation. If you remember the previous two times that they actually decided to do that, it rocked markets very, very quickly. It doesn't seem like they are intending to do that, but that's what concerns me the most, because usually what happens with developed economies, Japan, France, the UK, is that more or less through financial repression, they end up absorbing these long-term yield shocks. But China is not a world reserve currency, and China's debt is not what central banks have in their asset base as a reserve. Therefore, those shocks are only adapted by the PBOC by cutting the exchange rate. That would be my concern.
Danielle, we have to end it there. Can't thank you enough for joining us. Like I said, I look forward to this every single time you come on the show. Everyone in chat, please go and follow what Danielle LaCalle is doing on X and anything else that he does, because he's really, truly one of the best in the biz. Thank you so much for joining us.
Thank you.
Have a good one. Thank you very much for inviting me.
Always a lot to take from speaking with him.
A lot to digest, but
yeah, I'm glad I asked him that last question though. Like,
yeah.
what keeps him up at night? Like, and it's
that was a good question.
Yeah. Any initial thoughts coming out of this morning before we go into the later morning?
Into the later morning, just be aware we do have services data at 9:45 and 10, so watch out for that. It may or may not move the markets, but it has the potential, so we'll see.
Yep. No, chat, please hit the like and subscribe button. Again, on our way to 150,000. We crossed 145,000 this week. We're right there. Going to be having a virtual online party here on NinjaTrader Live with a lot of giveaways the day that we hit 150,000. So please hit like and subscribe. And again, love seeing your comments and questions in here for the morning. Hopefully we're giving you jam-packed information to help you prepare for the day. A lot to take in. I understand it. I get it. It's a lot for me to take in. I've been doing this for quite some time. But again, hoping that we help you guys get a better view of what's happening within markets. Shai, thank you so much. We'll see you in chat.
All right.
All right. Let's talk to Pharm. Pharm, what's up?
Morning, Deli. Good morning, Chad. How we doing?
Doing good. I'm going to go right into the charts this morning. Had some data that came out today. Yesterday, I didn't want to tell you I was going to put some Russell into my long-term account. So, I didn't want to spook everybody. I was like, you know what? I'm going to buy some Russell and put it in my long-term account. I have a few buckets of money that I look at. I'm not doing really much of day trading. I haven't done much of it at all this year, but sometimes I'll do it. And then I've got a swing account and I've got this longer term bucket. And I'm starting to buy some Russell just because I'm actually going to start there, because I look at it and go, it's finally proved to me that, look at the pullbacks are getting bought. I saw that we couldn't make a lower low from there, so I started to buy some yesterday. I think that actually Russell, to me, it's what I would consider cheap risk for a longer term account. If we start pushing back below really this big up moves low, I'd be out. I got all the moving averages putting up. I'd probably do some accumulation in here. But also the bond market yesterday, the fact that it did a 180, I look at that and I say, what's happening? Long end is not accelerating to the upside in rates. We basically went to, I think, 5%. Craig was telling me earlier, and this came right back. So I actually think that the market, despite some of the divergences we're seeing, I think the Russell is rounding out here to continue to make a move higher. It's been in a real steady uptrend. It's been so much sloshing back and forth for the last several months. You're starting to see the more narrow dips get bought, and I think we could be in for a move here higher in Russell. When I get to the rest of the market, I look at the NASDAQ. I still think this low is so key. I have it circled on here, and I won't change it because I think this was that low of that. Remember when you and I were on in that 2-day quick pullback, and we were like, whoa, that was it, and was like it got oversold, and we're like, wow, how did that happen so fast? To me, this is still the point of interest for the year, for the downside to me. If the NASDAQ can't take this out, it's just man, again, first day of the month, this morning, if anyone caught it, I was saying, you know what? We just can't go down. We try to get bearish here in NASDAQ. I still think it's more of a two-way tape where the NASDAQ is going to be a lot of back and forth. You've got the top end of the NASDAQ still doing pretty well, and I don't know what's going on in the middle. Does anyone really know? Probably not, but overall, the NASDAQ is, it's the market leader, and when the market leader goes and tries and takes out a previous low and it comes right back off of it, and it just tells me something. It's look at, I know we've got all this data and all this stuff. The market had all the reasons in the world to flush this out a little bit further, and it just couldn't do it. You're back to this cluster of moving averages, which I think for intraday day traders and NASDAQ, you got to watch this as a two-way tape. I think you can trade them on both sides. I just think you got to be small and know, even though the primary trend is still up, I think you could take shorts. I just think it's a two-way tape. And I think if the NASDAQ could start pushing back above these moving averages and really get back above this recent high up here, again, I'm always looking big picture, 23,803 and change. Man, I just think you have a Russell that looks good. You have a NASDAQ that's fighting through it a little bit. And if it starts to push up a little bit, I think that the market is looking, say what they want about weak seasonality in September. I think it actually looks bullish to me. When I look at S&P, it's the same thing. I talked about this area back in here. This was a huge area for me, and it's not going to change. Again, I look at the market more in a medium to longer term time frame these days. And this area, as long as this holds, narrow pullbacks. I mean, the S&P is less exciting to me to the upside than the Russell is. I think it's probably still more contained. But for the most part, if the S&P is holding this recent low, comes up in here, I would not be surprised to see the S&P. I'm more, as a short-term day trader, I'd be leaning on the bid because the NASDAQ might be a little bit choppier, but this S&P, that's a good low, man. I mean, it's just like right back into the moving averages. It starts to get back up in here. Why not take this high out? I wouldn't be surprised to see 66 and a 25-ish. That's an area I have up as old Bollinger Band peak. Don't love it. It's not super clean, but nonetheless, I think when I look at the indexes, it's hard for me to be bearish. I think the NASDAQ, again, is the two-way tape, but the other S&P and Russell, I would lean way more on the long side. When I look at the bond market, again, gosh, it's so interesting to me to see what it did on the first day of the month. You break outside of this range, right? They make a lower low, and the bond market had been trending lower, right? And the bond market, why does it matter? Well, we're getting into a situation where, rate cuts are becoming right around the corner. Everyone's talking about how much the Fed is going to cut, and you have the bond market on the long end reacting, which we all know that the Fed can't manipulate or change what's going to happen on the long end. But the long end, if it were to start going lower, going into interest rate cuts, I think that's actually bearish for equities. And so the fact that they couldn't sustain that sell-off and turn right back around, and we're right back in this range, I think equity markets go, okay, long end is somewhat stable, back to risk on. And that's just what I think is happening right now. I think that when you look at it beyond just the equity indexes, this to me is important. Watch the bond markets on all the data points. Today we have more data at 10 a.m. Watch the reactions. I don't think it matters where it is right here in the short-term movements, but if it were to start taking out this swing low again, well, actually I got to move move this over here, move this down here. I'll get it eventually. That down there, to me, that is an area to watch. But if the bond market starts to rally, I just think it's hard for me to see a reason why equities just don't keep going higher. That's my initial thoughts for today.
Yeah, I mean, the nice thing about the Russell, Deli, is that you can just kind of average into a position. And I mean, when it goes to zero, you can buy a lot for zero, right? I mean, I haven't done the math on how many you could buy, but I'm sure it's a lot. So
yeah,
you buy a lot
one
for zero.
bid. One bid.
Yeah.
One bid.
I've bid at one. That's exactly right. Going to be a little aggressive and, chase it at one. And as it ties into the bond market, since you sort of started with Russell, ended with the bond market. Yeah, I mean, we've talked about this before. I mean, the Russell, it needs kind of Goldilocks to rally. And there's also kind of a fine line between stagflation and Goldilocks, right? Growth isn't, too low, but at the same time, inflation's not too hot. I mean, it's got to be kind of somewhere in the middle. And so far, it's been reasonably Goldilocks data. And I think that's why we've seen the Russell perform. You mentioned yields going lower. Certainly that is supportive of equities, at least using financial conditions. The only problem is if, they collapse as a result of, some crazy disaster in the jobs market, right? And there's not really any indication of that yet. As you guys were saying this morning, slowly slowing economy. And as long as that continues to be the case, equity markets will continue to digest that. And I do think that can be very good for the Russell. So I kind of like that idea because, I mean, you're going to know when you got to get out pretty quickly, right? I mean, if inflation comes roaring back or the jobs market takes a complete dump, it's probably not going to be any good anymore. So Outside of that, where we're at now, it looks fine. With respect to ES and NQ, we talked a little bit yesterday about, my goodness, this 6460 spot that I truly never want to see again on ES in the range that we have effectively traded, 6460 to 6500, if you want to just make it round numbers, has just been, that's been a brutal trading range that I choose not to operate in. I said yesterday, sellers had a shot, which was basically, and actually yesterday's range perfectly fit within that monthly low volume node that we talked about yesterday. So it's like the exact range, basically. The bottom of the upper distribution from what month are we in? Yeah, so I guess August is basically 6460. The top of the sort of central distribution is kind of right there in the 6430s. And yesterday we held Tuesday's spike base at the low just below 6430. So yesterday's range is kind of like perfect. Whoever ends up winning that day's range, yesterday's range, I think can take sort of some short-term control into tomorrow. As of now, we are holding broadly above yesterday's high, but more importantly, this 6460 spot, but it hasn't gained a whole lot of traction yet, right? So we are going to need to see initiative buyers willing to step in and drive this towards, let's say, 6480s to feel a little bit more comfortable that this has been reclaimed and will hold. I was the 6460s seller yesterday until, the spike base held, and then you have to get the hell out and flip long, or at least be flat. You see what happens. And this is, it's kind of a good teaching moment here, because a number of people were asking about this. So if you don't know what a spike is, basically you just make new low of day or new high of day in the last 30-minute period. And so the range of the spike would be the prior high of day or low of day to the actual high of day or low of day. And so for ES, it was 6425 was the base of the spike. That was the prior high of day before the last 30 minutes yesterday. And then 27.75 was that day's high. And so the point at which, this was just ridiculous. Like, I was watching the guys on stream because, I was already positioned and I wasn't about to do anything. This was just insane. And so, kind of the amount of volume that was getting slung around here. What happens is, if you have, which you do, right? If you have sellers trapped from the prior day and they're still stuck short, and then you have yesterday's sellers just piling volume on top of it, trying to break back into the prior day's range, and they don't win that fight, they're going to the colorectal surgeon. So this is what the colorectal surgeon visit looks like, right? An absolute piss missile, because you had yesterday's sellers just completely stuck. Yeah, the prior day sellers completely stuck, and that's what you get. So, coming into today, broadly, as long as this 6460 spot holds, it is constructive. I'm not looking to necessarily fade it. I will say there is a higher than normal possibility or probability of an outside day. It doesn't look like we're going to get it. We traded higher first, so that would then at this point now look like an outside day to the downside. It can always happen. We haven't opened and traded cash a single minute yet, but I probably would have expected to see some kind of response on data get us below, let's say 64, basically called the overnight low is key, right? So if we're offering the overnight low, that's basically at Friday's low. And also you can see it's sort of the upper edge of this primary distribution from yesterday. So if that's lost and offered, I think we're coming down towards 64.40, maybe 64.38-ish. And then that threatens this 64.30 in yesterday's low of day spot. So, it can happen fast. It's a pretty small range. I don't see any indications of it yet this morning, but if sellers come in and start selling, but there is that potential based on yesterday's profile. And if it actually plays out, I'll find the old video I did it on a long time ago. But I would have expected, if that was going to take place, I would have expected that move to have started by now. But every time we get off, like something radically changes. So we'll see. Just be aware that, if 55, let's call it, is lost and offered, then that potentially comes in play for today. But as long as broadly 64.60 is holding, I'm looking for, this would properly tag Friday's close, which was August close, up here in the 74 to 76 range. And ultimately, I would be targeting basically 6,500, the same range you guys know extremely well. You don't need levels for the 64.60 to 6,500 range, because it was just ridiculous. And then NQ is like a similar story on NQ. It has not put in as much traction above yesterday's high as ES has, at least on a structural basis. But I mean, again, you're still getting these reclaims. You can see the meat of last week's volume over here to the left. That has been reclaimed and bid overnight and has held. So that's sort of your line here. If we lose an offer 425, 428s again, 438s, I'm sorry, then, kind of the same deal that we've been used to. I get very, very cautious on peaks above this 551, 23, 551. You can see that we struggled with it overnight. There's a reason for that. We had this massive set of singles here. And so if we kind of sweep out, these highs from early week and then fail back below 480s, I would become a little bit cautious there as well. But you're right. I mean, the dip was relatively shallow. It was bought very quickly. Things look very constructive. And so sellers need to prove something. It is on them at this point. They will need to take out a prior day's low back below 64.30 on ES, and they may have something. But until that happens, we'll probably be sticking. Probably be sticking with the bulls.
Yeah, I mean, a couple things before I let you go today. I mean, I looked at that low when we made it. Again, we go back to where we were at the beginning of August, end of July, where we had that quick move, 2-day lower move that got oversold and oversold. And it was just quickly bought up and everyone was kind of like watching it and it just came all the way back. I got almost a similar feeling while I was watching that NASDAQ the other day on the first day of the month. And the first day of the month to me is interesting because you want to see what the flows are coming in. And the fact that we were going down with bonds, and again, markets have all the reasons in the world at that point, if you've been long, to take some risk off, and you see sellers come in and they just could not take it any further. And again, that's why yesterday, I think was such, an interesting day, because the fact that it really it almost didn't look like they tried to go lower. We just kind of drifting back up. And again, I'm looking at NASDAQ again today, higher high. And we're now above, we took out what the monthly opening high, which was 23,502 in the NASDAQ. And it's just, it's like, again, they've proved nothing. I mean, I think if you want to be bearish, you have to say to yourself, when are they going to prove something to me? We just don't see it.
Yep, that's exactly right. And that's where we're at today. So, if they want to come in today and take out the overnight low, find some traction there, then maybe things get interesting. Ultimately, they will need to take out a prior day low and force balance, because otherwise, once you trade back through, this prior range and just rip right back to the top, then, it was just a giant LOL on that sell-off. So they have to take out a prior day's low to force this to a broader balance.
Yeah. And it's funny, this morning, I'll leave you with this last thought. So, I was looking at, I typically don't have, I haven't had a lot of positions on in a while. I only have a couple on right now. I'm long some Russell and I'm long some crypto. I mean, what is wrong with me, Pharm? I need help. This is a cry for help right now. I'm long Russell and crypto. Like, what is going on?
Pretty degen.
I might have to check my. Yeah, well, I'll be checking the phone later and seeing why am I doing this to myself. But anyway, follow Pharm, everybody, on X. Always check out what he's doing with his Substack as well. Pharm, you're the best, my brother. Thank you so much. We'll see you tomorrow.
We'll see you.
Actually, I'll see you Monday. All right, everybody. It's Thursday. I forget, the week was cutting short. I was thinking it was Wednesday, but it is Thursday. And what is Thursday about? Well, earlier this week on Tuesday, we had black boxes. We had Merritt Black with Christian trading boxes. Today, he's Han Solo. Let's get ready to trade the open with Christian. Good morning, my brother.
Hey, Deli. How's it going?
Good, man. Confessions of Deli here. I'm long Russell and crypto. Like, I just don't know what's going on right now with me. It's a problem. I'm scared. I'm actually going to probably close a lot of these positions right when I get off here. All kidding aside, it's just funny.
You need some action, huh?
Chris.
Because you're not trading futures right now. You need some Russell and some crypto.
Yeah, I mean, it's funny. I bought. I'm long some ETH. I was long a bunch of ETH. I sold some of it, and then I bought some back, and then total degen trade. I saw that WLFI token came out, and I bought some of that. I have no idea why. I had some crypto in there. I'm like, oh, let me buy some of this, and I'm down 20% on it. Not a big deal. Luckily, it wasn't. It wasn't a large amount. This crypto is something. It's like I didn't buy. I remember when the Trump and Melania coin came out. I was literally looking at it on Kraken right as it came out, and the thing just like exploded. I'm like, dude, all you had to do was buy like 10 grand worth. You know what I mean? Pick up 100.
That was a wild night.
And then ultimately, it was wild. And I said, you know what? So I've been leaving some crypto in there, and I play with them every now and then. But the swings are just so ridiculous. I mean, you're not. It's crazy. And then in my long-term account, I bought some Russell. I'm actually using futures for that. So I've been accumulating some RTY little by little. I got a pretty, I wouldn't say tight, super tight stop, but tight enough to where I look at it and go, I just think if we're going to rally, I think the Russell probably does go here. The NASDAQ to me, which I would have loved to have bought, the tape just doesn't look super clean. I mean, what are you seeing coming into today?
It does not look super clean. Yeah, we're in a very complex structure here that it takes a lot of patience and a heavy focus on risk management to make sure that we can make it out alive, or else we're just going to get chopped up. And then when we really get into that really solid environment, we're just going to be, our emotional and mental capital will be depleted. So let me go over my plan. I'll share the 4-hour here. I think we've all been talking about it, this massive range we've been in, ES from 63.70 to 64.95. We had that big drop to start off the week. We reclaimed 64.20s, which was that middle sort of dividing zone. But yesterday we were ping-ponging between that 64.20s and then this 55.60 that you guys have all talked about, Pharm as well. And the idea today is like, okay, well, we have broken above that 60 area. Can it now act as support on a pullback? And if so, can it push us out into the top of this overall range that we're in? If it fails again, well, guess what? We're going to go back into yesterday's range. It can totally traverse back down into prior day low, 64.20s, and we can ping pong again back there. Or if we are seeing a true sell-off, we'll probably break that. NQ, a little bit of the same on this 4-hour time frame. The level to reclaim was the 430s, 440s. You can see it's sort of like the bull bear zone. Every time we go above, we go up, and when we get below, we go down. So there's a pattern here, and we were struggling yesterday to get above it. We eventually did. So now I'm looking at, well, on a potential pullback, can it act as support now, and then continue higher to that next area of resistance at 600 to 630s. If it fails, well, we're going to go back down to that 280, 300 area, and maybe ping pong again to close out the week. So that's the overall 4-hour structure. And regarding the hourly plan, to help me sort of align with the shorter time frame and then trade that, I'll move this over here. So here's that zone, that 55.60 area. You can see that we did hold it overnight and probably had some good opportunities to bounce and those reversals higher. Can we see another one going into the open this morning? Or if we can, great, then we can sort of push back up to London's high, and then maybe that can generate a push up higher to 64.90s, and then higher if we go past that. But if we cannot hold this 55.60 area and we start holding below it and form acceptance down here, then I don't see why we can't come back down to 64.20s, which is that main support area now, with, of course, the 64.43 being a sort of a pivot inside this overall range from 64.20s to 64.70 that could potentially act as support. For NQ, which I'll be trading, this is that 430s area here, 440s that we reclaimed yesterday into the close. We moved up higher. We've been consolidating above it around 460 to 530. If it can come back down and test and act as support, then I'll be looking for longs up into this 580 area, with the 600, 630 area that I highlighted as major resistance. This is like really the level to get above, and that will act as resistance until we can form acceptance there. If we fail to hold the 430s, 440s, then no reason why we can't come down here to 360 bounce. If that fails, then we can see that 280, 300 area down here. But overall, it is a little bit of a complex structure. We're just in a range bound environment, and then just have to focus on mean reversion at the moment in order to really survive this.
Yeah, I mean, I love looking at your work in the morning, seeing what you're looking at for a plan. I mean, and I said this yesterday. I've been saying it all week. I think the Nasdaq is a tape where you can trade on both sides, and I'm someone who almost only looks at one direction per day. And for probably the first 10 years of my career, I've traded both sides, and then as time went by, I almost tried to focus on one direction. It actually really helped me, even as a super short-term scalper. So I like to look at the environments to determine that. When you look at the Nasdaq right now, when you see that we're kind of like clustered, I mean, everybody can go and look at the daily. You just go back. We're right in the almost in the middle of where we opened. Well, from the last day of July into the first day of August, we've just almost been trading between those two bars. How much does that play a role into maybe position sizing for you in this? Because it just seems like, again, I think where a lot of traders get caught up, Chris, and I think you're great at this every day every time you come in here and we get to see it. You know, you're very patient, you're very particular. But are you in the back of your mind also understanding like what kind of environment this is, and you're not getting too aggressive on one way or the other? Because it really has been a range-bound tape.
Yeah, it is. You know, I think what's important for many to understand is that when we get these shifts in environment and what worked for you in the past environment, like April to July, you're not, if you're not as experienced as one would hope to be, then you're not, the rate of adaptation to that environment will be slow. And if you go in with the same size because you've been on a roll and you've been making all these points and you transition into this environment, you're just going to get crushed because you didn't adapt fast enough. You didn't really take time to consider, hey, what's happening here? Maybe the same opportunities were sort of playing out, but you were just getting stopped out. If you don't take time to really, on a weekly basis, audit the environment that you're in and how your approach and system is doing, then yes, sizing will be an issue. Your aggressiveness will be an issue. That may lead to over trading. And eventually, when somebody gets to your level, you've been through so many cycles that you now can sort of identify. I mean, we all make fun of the Bollinger Bands, but they're a good way to help you gauge the environment when we're trending and not trending and they're contracting. And you now know, you're not guessing, that the environment has changed and you adapt already because of all that scar tissue, right? But like you said, yeah, the sizing, the aggressiveness has to change. My sizing goes down a bit. I'm more patient. I do a little bit more mean reversion trading in both sides, but I still, have to be disciplined and patient with what I'm looking for and what I'm trading.
Yeah, no, that's well said. I mean, that's why I love watching you come in every day, and it's like identifying the potential setups in the morning, going in and really truly sticking to your plan, because this is where the people veer off of it or they try to implement their will on the market, right? It's been slow, it's not been super busy, and then that's either they're forcing it or it's an oversized situation. I think the one thing that that you showcase and as people that are experienced over time showcase is subconsciously I understand the environments, like, because I've seen it so many times where I just, you slow things down when other people are trying to speed things up. It's the mistake I've seen over and over again. It's like, I don't need to be in a hurry, right? I know what I'm looking for. I know what I want to see. And if I don't see it, I don't really care. And I think that's one of the hardest things in this market environment. And like I said, the way you come in and do it every week, I truly love it. All right, I'm going to hop out of here. Everybody in chat, show my boy Chris some love. Hit that like button. Hit that subscribe button. We're on our way to 150,000 subscribers, where we're going to have a nice virtual party here on NinjaTrader Live, and there will be giveaways and all sorts of stuff that we'll be doing here. So help us get to that 150,000. Again, as some of the guys say, it's free just to hit that like and subscribe button. Chris, you're my guy. I'll be in chat. Appreciate you.
All right, Dilly. Enjoy your weekend. All right, chat. Guys, how's everybody doing? Let's do roll call while we wait for the market to open. Emilio, Gary, Infinity, Cooper, Video Starcade. Morning, all. Juan Gabriel, good morning. Mike, Felix, Ivan, Fractal, good to see you. Ari, good to see you. Justin, the good word. What's the good word for today? JT, Tom, we have John in the house. I saw Sorona here earlier. Mikey, Pinoy futures trader. Hi, Faina. Oh, we have Paul in the house. Paul, good to see you. Chuck, Bren, good to see you, Bren, my friend. Oh, we have Carter in the house. Alfonso, Aaron, Mike, John, Matt. Yeah, we have a full house here. Love to see that. All right, so we have 840 of you guys here. Fantastic. Francisco, Henrik, Elsa, me here from Austin. Welcome. Check us out every day, Monday through Friday and Sundays for the open. So you can have somebody whisper sweet nothings into your ear every day, pretty much. Fitz, good to see you. All right, guys. So, I'm sort of just waiting here to see if we can come back down into support. I think we've all highlighted that 5560 area. Yesterday was resistance. I shorted the push up above 440s into like that 510 area. I shorted this move here. And let me just touch on that too. Right here, I shorted this wedge that we formed. And, you guys typically don't see me short that much because we sort of been in an uptrend and I'm focused on longs, but, something really solid came out yesterday. Let me share that here. To show how I sort of look at my combined multiple time frame analysis. But ever since that reversal from the start of September, we had a hourly 9MA higher high 1, higher low 1, higher high 2, higher low 2. And into that push yesterday to new highs, we had a hourly third higher high with, you guys know me, RSI divergence. So that third higher high, which hopefully by now we all know that it's either into the second or higher high that we sort of end the trend that we're in on the 9MA. Sometimes we do make that third higher high or third lower low, and it's sort of like the climax top, right? So that's what played out yesterday. We pushed up to that 510 zone. The third higher high, we had hourly RSI divergence. So that sort of set up the move for me to take that short here. And I waited for a wedge setup to indicate that we were sort of just, to give me the setup that to possibly manage my risk. And that gave an amazing short. I held it all the way through here. And then I caught this reversal back up into the close right when this wedge broke out here. It was something like this. And I rode this all the way. I did close it probably like at 4R right here. So we'll see what happens now. I did want to make a note regarding what Deli and I were talking that, when you enter these environments right now, I would say it's a complex environment that many maybe not are not used to, and they're not really as confident in trading it. It's you really have to consider these periods as that possible drawdown period, right? I know we all want to make money every day. I know we all that's our goal, right? But it's just not possible. It's not sustainable to put that kind of pressure on yourself. And you have to really be okay with the drawdown periods, because if you're thinking long term and you're looking at sort of like, I look at this as decades. I've already put in a decade. I'm looking to this the rest of my life, but there's going to be periods of inaction regarding your performance, and if that leads to short-term losses, then as long as you have a system, of course, that's going to lead to a possible drawdown period. And your job then is to manage that drawdown to be at least, the least possible drawdown percentage-wise. Maybe that's 10%, maybe that's 20%. I know there's a lot of leverage traders here, so maybe that's higher of your account value, or you're trading these prop accounts. But you really, if you don't have experience to go through these cycles yet, then you don't understand how it is to trade and live and breathe in a drawdown. You don't know how to regain that drawdown. You don't know the work that goes into that, and you don't know during that period the emotions that you go through. And so you really have to do some work to allow yourself to understand what it is to be in a drawdown and to be okay with being in a drawdown. Of course, again, look, you need to have a consistently profitable strategy in order to be able to be confident in the drawdown. And I would say that these periods, like you guys see me, I'm usually firing longs, when we're in an uptrend, because that's the sort of environment that I thrive. I will put on size. I will aggressively trade a directional trend, right? Since I'm a trend follower, obviously, when we're developing these trends and we're sort of in a multi-week uptrend or a multi-week downtrend, I do extremely well. In these range periods, I can still make money. So maybe I'll go into a drawdown. But the overall focus for me here is to make sure that I'm patient, make sure that I manage my risk a little tighter, make sure maybe that means a decrease in my position sizing. Maybe that means a decrease in my trading volume, because what I don't want to experience is a week or multiple weeks of this range bound structure where, yesterday you saw a perfect example. We dropped, we opened up, we rallied hard, we were at highest, we rejected hard, and just for the rest of the day, we sold off. And then maybe like in the last hour and a half, we sort of went straight back up again. Right, you're not really seeing that in a strong uptrend or a strong downtrend. So this is a lot of mean reversion. And for me as a trend follower, you can imagine that my runners are getting stopped out way more than a one direction market, right? So these are things that I have to adapt. And if I don't adapt, then my losses can be take more to recuperate. My mental and emotional bank account can be deplenished, so depleted, and so you want to make sure that you are focused on your personal parameters of how you apply yourself into the market in order for when that environment does return, you still have that money, right? You didn't lose it. You still have that mental and emotional clarity in order to really succeed. Let's see. Awesome, Edgy. Matt. What about today's fourth higher high? And it's not the fourth higher high today on the hourly. It is it's a little bit of complex structure. Like, this is what I wrote to my group. Let's see, what time is it? We have 7 minutes. I wrote this for my group. I write a morning trade plan that I share here, but for the group is we had this hourly 9 MA uptrend, and typically when that ends, we then revert back down to create a swing low, and we wedge up and consolidate. Right, this is when the 9 MA flattens out. Like you see the 9 MA here in yellow, that's telling you that we're in an uptrend. Eventually, it flattens out. We get a contraction, and I made a note here in the plan that hey, this is where we should have gotten that consolidation. But we're still moving higher. We really didn't consolidate. Was this a consolidation overall through time? Yes, but it didn't really develop that wedge structure that I'm looking for when a 9 MA trend ends. So, there's a question there. Is this a continuation of that 9 MA uptrend? And then at this point, is it just too extended? Like, is this just too much and we need to correct that and then now enter a consolidation? Which means we do lose that 55.60 in ES and we come down to 40s or maybe 64.20s. For NQ, a little bit of the same. Is this just an extended 9MA uptrend. And then we're now going to correct back down to 360. Possibly, but that's what makes it a little bit more complex, is that this should have been a normal consolidation, but due to the environment that we are in, these resting periods are shorter. The reversals from one side to another are more aggressive, like we saw a perfect example on this drop into Sunday and then a reversal back up. Where is that consolidation? Where's that resting period, right? This is the retail's market. Institutions are not playing around here. When institutions show up, they are one directional move higher or lower, right? They're just waiting here. They're waiting for news like Deli and the guests we're talking about. And then now this is a ping pong retails market where, you can get chopped up if you're not really managing your risk. If you're over trading, you really have to pick your spots well. So I wanted to share that because it's, it is complex, guys. So if you're going through a little bit of a tough time, have some grace and understand that this may be a drawdown period, but really an opportunity for you to slow down. And we have a little bit of a divergence here. Let me see. NQ made a new low, ES didn't. We're not really at that support area, so we can hold and bounce back up. But I think I'm still going to be a little bit patient here. Let me see. William, it's a 2 and the 5 minute. I like to call myself an hourly trend trader with a 2 and 5 minute entry model, entry setup, whatever people are calling it these days. I'm old school. They're called setups. HK, the kind of moves that we're seeing on an intraday basis, that's retail. That's like if institutions buying, that is a heavy amount of money being put to work, and they're driving in a one directional move the market. Are they buying at the lows? Sure, yeah. And maybe we saw that in last week's pullback or in August 20th pullback or August 1st pullback, right? Those lows. That's them. But this middle of the range action, that's not them. These billions of dollars being put to work will move the market. This back and forth is not, it's not that. Right now they're resting. I mean, they put a lot of capital to work. All right, so it looks like we are getting that reversal. That's fine. Actually don't need to look at options flow for that. So getting a little bit of that reversal here, we did have a divergence where NQ made a new low and ES didn't. I'd love to see that. Somebody like Kane will call that an SMT. I think Tanya trades that as well. I'd love to see that. That is an additional level of confluence that can indicate a reversal. And then especially if you have an RSI divergence, which it did. I was a little bit slow on getting this, and it's still not really into that support area. So I wasn't really focused on buying that, but we'll see how it goes into the open. My ideal area of support is 55.60 in ES, and then 430s, 440 down here in NQ. Let's see how we open. We have a minute and a half. I mostly trade NQ. I used to trade ES. I started out trading ES, but just NQ from a business perspective offers a better return profile. So here's that 9MA reversal setup. moving up higher. So if you caught this, for those in the group, fantastic. At 1R, probably hits 1.5R here soon into the open. All right, let's see. Look at that. All right, so slapped right back down. Let's see if we can hold the lows. NQ did hold the lows so far. ES is holding a little bit better. New lows just made. So, if you would have taken that reversal here, you would have got on a chance to take half off at 1.5R and then got stopped out on the rest. We have 64.68 resistance in ES, so we need to reclaim that in order to be able to get a chance at going higher. Let's see how we do here. We're in a little bit of a range. NQ, both NQ and ES has been in ES has been in a 64.60 to 64, let's say 71 range. NQ 450s to 520s. Let me highlight that here. All right, so it's back up after I'm putting in that new low and stopping people out. Let me, all right, so this is our range. I'm going to look to engage on a break away from that. There was another SMT, another divergence here. NQ made a new low and ES didn't. So at the moment, I would say ES is a little bit stronger. Looks like large caps are sort of helping this market stay up. Amazon breaking out higher. All right, let's see what happens here if we can continue to hold. We're just in a range bound structure, so nothing really exciting at the moment. ES was the only viable opportunity that I could see for my sort of approach because it did not make a new low. On NQ, this new low was made, but then there was no additional entry for me, right, to join back up. Like there's no setup there at that point. So let's see how we do as we come into the top of this range at 520s in NQ, and then ES 64, let's say 68 to 70. Any of you guys get long? Nice. Take your partials, guys. We're at that resistance area. So we want to see how we sort of engage here. Can we form acceptance? For me, I need to see this wedge structure and then a setup for me to really engage. If not, this can lead to a failed breakout and move back down. Amazon on a tear. Google, Netflix breaking out. All right, so we're intending to break out here. Let's see if we can hold and create a wedge structure that I look for. And if so, that will allow me to engage. But I will say that I look at SPY and Qs, and they're a bit extended. So I would not be surprised if we do fail. Yeah, I would not be surprised if that fails. Great long though for you guys. I think the only viable one that I see for myself would have been ES on this 9MA sort of reversal here. It didn't make a new low, so that stayed intact. All right, let's see if we can hold or not. I do like the idea of a short here only because of how extended we are, and we need to see acceptance up here. Let me see if we can form a higher low here. And it may high one, higher low one, and then see if that can fail, and then can give me an opportunity to sort of engage. No, I've had the delta on there. Nautilus. It's always been there. Maybe you only just had one eye open, not blind, just one eye open, half asleep maybe. Yeah, so it looks like it's failing. We want to see, there's really no, I mean, maybe this is the higher low here, right? It looks like this might be the higher low. Either we bounce back up, consolidate, and then maybe can set up a proper structure, or we just go back down. But there's really no structure here for me to engage at the moment. Like I said, not surprised if we fail here just because of the extended sort of move that we had yesterday into the close and then the scalp up open. That needs to be corrected, right? Let me show that here. Here's SPY. I look at SPY, so look at this move here. This needs to go through a consolidation period now, correction. So, and then here's QQQ. Same thing. Super move, push higher. We need to correct that. So it makes sense why this would fail, right? I hope everybody can see that. Move to the top of the range, took some maybe stops out, took London's high out that I can see, and then now back down. But there's really no structure here for me to say, hey, here's a higher high, higher low, and then on the break of that, I took short. So there's not much for me to do here other than to wait. As you guys know, my 9MA reversal setup looks to wait for a 9MA higher low to form. Then I'll look, oh, I don't want that. Then I look for a sort of entry below that and then a stop here. And then that's how I look to engage. But there was no sort of straight back down again. My rules were not met, as they say. And, in order for me to have a more sustainable practice, instead of chasing, for me, for my approach, you guys have your own different rules. I would call this, chasing back and forth, because what happens here is you're going long from this bottom of the range, you're going to the top. How I see it, you have to take partials up here to pay for your risk and the chance that we can reverse back down, especially in this sort of structure. Why would acceptance up there be a good sign for shorting? Wouldn't you want a quick rejection? Yes. So I share that acceptance up here would allow us to look at the possible opportunity at a push higher. If we fail that, that means that the first 9 MA higher low, higher high, higher low would fail, and then we can push back down. That would mean, yes, a short period of consolidation, very little, like we're seeing here. Did ES form something? No, ES is doing a little bit better. It is holding. It created a little bit of a better higher low here. You can see the pullback into the 9 MA, higher high, higher low, and bounce. But NQ is really not moving along with this. Thanks, JT. Just a lot of work. Yeah, so like I was saying, in me trying to chase this breakout would be just that, chasing. How can I manage my risk on an entry like that, right? For example, I want a sustainable trend to participate in, okay? In order to have a sustainable trend, you need a period of consolidation to create energy for a sustainable trend. So if that doesn't happen, I have no way to manage my risk, aka wedge, on a trade idea to have a sustainable trend where I can risk 1 to make 3 to make 5, etc. So if that doesn't happen, I cannot engage. And you can see here that we're failing. I mean, it was just, to me, a really high probable failure setup, but I just didn't have my setup. I was waiting for the higher high, higher low, and then for that to be taken out and then move lower. Technically, we did have a higher low, but look at this. This is higher high 1. Where's the 9 MA? It's over here in yellow. This is the higher low. That's not a proper way for me to engage in, because look, that would mean my entry goes here and my stop goes all the way here. That's not a sustainable risk management spread for me. Because if we come back down here to the bottom of the range and then bounce, well, I didn't really get the chance to really take partials, right? Because we're in the range. So why would I be taking a short 80% of the way into that next area of the range? It doesn't make sense for me from a risk management perspective. So the risk reward is not the same. If we would have created a higher low here, higher high 1, higher low 1, and then sort of broken that, well, look at that difference here. Your entry's there, your stop is there. Look at that. By the time price comes back down to the other side of the range, you're already well into 2R. That is that's attractive to me. So for those reasonings, for that reason, right, like in Shark Tank, my rules of engagement were not met. And so I don't have no FOMO in this. Because my rules weren't met. So what was there really a trade, something that I missed? Not at all. So far with ping ponging, ES is leading. Let me see what industrials are doing. Financial stronger. Yeah, so cyclicals are stronger right now. Tech is not doing that well. We do have like Amazon who's gapping up. Fantastic. I'm long that actually. So if we can hold up here, I'll look to add to that. But Netflix is also breaking out. Is that right, Jacob? A higher time from trend line? All right, well, we're just sort of ping-ponging. You know what I need to see is, and I talk about this a lot, I need to see a change of character to allow me to engage to a break of the opposite side. We have this, maybe we get a little bit like this again. Eventually, when we sort of do something like this, this is acceptance. That will be a change of character versus the ping-ponging back and forth. Volatility will come down a bit, and that'll allow me to sort of engage in a directional move. If that's to the downside, we will get something like this, acceptance, and then a breakdown. But that's a change of character, right? That is price telling me that it may be ready to move away from this range. So until that happens, from a directional perspective, to engage in a trend away from this, I have no setup here. Alfonso, your lines need to be better if you're gonna, go philosophical again. So right now we're just ping-ponging. I'll put this over here to show what I'm waiting to see from a directional view. What's ES doing? ES is leading. Yeah, finance. Netflix, gosh. Yeah, I'm looking at stocks as well right now to see how the overall environment is. A little bit of mixed structure. I think Mag 7, Meta, Apple, Google, Netflix, Amazon, they're sort of keeping the market afloat at the moment. Software is a little mixed. All right, so yeah, some semis are struggling. I did see ASML, which I'm looking to get long soon. Have a strong day. It's in a stage 1 base, if you guys know what that is. So just imagine the trend that will come out of this. How did you learn that price moves in those structures? By just screen time. Screen time that and seeing how it moves. That's it. Yeah, stages. Stage 1, stage 2, great for swing trading. That's what I focus on. Yeah, how did I learn these structures? It's just screen time. Just understanding how a trend starts, how it ends, how a trend consolidates. When there's no up or down, it's just sideways. The functions of each phase of that trend, what the volatility looks like, what entries and stops work best in those different structures. It's a lot, definitely. You incorporate multi-time frame analysis to understand that trend structure, for all of it to align. And I think that's what I share on my trade plans and what I look to do every day here, every day that I'm here. But at the moment, really, I think we've gone back to that trap in Thursdays instead of, it was earning and learning. So far at the moment, it's just back to that trap in Thursdays where we're just trapping everybody up. I mean, unless you're scalping this at the exact high, exact low, very tough to really engage here for me. No, Tracy, not Armani. Fabio asks, I understand that you mark relevant areas in 4 hours, and then when price reaches those areas, you look for structure, and when the wedge breaks, you enter where the price is heading. Yes, relevant areas on the 4 hour and hourly. When price reaches those areas, I am looking to engage either via a reversal structure. If let's say price pulls back into a support area and we're in an uptrend, well, I want to buy that pullback with my mean reversion entry, right? Which is what I call a 90-minute reversal. If we're moving away, like here, this is a micro structure. If we can form a wedge structure here, like this, then that would mean acceptance that it wants to break out. If we do that here on the underside, it'll mean acceptance of support and that it wants to break lower. So for me to engage on a directional move away from this range, this is what needs to happen, this structure here. Until then, we can be reversing back and forth, you know, and then same thing here. Too many lines by now, but you get the idea. So I want to just be patient here. You know, Deli and I were talking about, it's a new environment. If you have not adapted to that, I suggest you really spend time to, you know, write down what's happening, annotate things, save it, add it to your library, create a library of different categories of a bullish daily uptrend. What are those filters for you, right? Like, I think we can all say that if I think I brought this up, if we're above the 200 MA on the daily, we're in a bull market. If we're below it, we're in a bear market, right? Something on the chart that can help you understand where buyers are in control, when sellers are in control. You need a trend filter. And then, you know, where are we right now? Like, for example, right now we're below the daily 9MA. And those of you who know, I focus heavily on the 9MA. Oh no, are we just breaking above it? No, we're still under it. So technically, we're still in a little bit of a downtrend, even though we're flat because we're below the daily 9MA. We need to break above it. Yes, Dane, I shorted a wedge at resistance. All right, so we just have to wait it out here, guys. That's funny, Faina. What's the purpose of the EMAs? It's allows me to understand trend structure based on the structure that I follow. That is the purpose. All right, so we're wedging up here a little bit, but we're right in the middle of the zone. So this indicates two things for me. A break away from here can lead to a failed breakout or failed breakdown. However, because we are contracting, we're creating energy for a move. Okay. But do we be aware, because of the environment that we're in, that it can lead to a failed break? So I like, you know, if this was sort of here where this is, that would be a really sort of viable setup for me to engage on the short side. Can this break and lead to a massive breakdown? Absolutely. But again, it's in the middle of the range. I would say that ES is holding in the upper area above this 68 zone, in the upper area of the range that it's in. If that fails and NQ breaks, then there could be a good chance that we break lower. The red line is the 50 EMA. For those in the group watching, SPY and Qs are in a 5-minute 9MA consolidation, which tells you that we're creating energy for a move here shortly, and actually might look to engage here. Let me see. We just range bound at the moment. Yeah, look, if this was down here, I would be looking to short that. But, you know, there's still that chance that this can come back down, create a failed breakdown here, and then get back up. The aggressive side of me would short this, would like to short this. Let's see how it does. I do like this. It's just tough being here in the middle of the range. And, something I tell the group is that, look, whenever you see something that's possibly viable and it does not really meeting all your rules, you have to be okay with missing it. Like your number one goal is capital protection. Like, you just have to be okay with missing it. Because, for myself, if this is a sort of like a quieter period, maybe let's say this month, if we're in this sort of structure, then I know that when it's sort of a strong directional move in the markets, that I will do extremely well. And so missing a move during this period doesn't really affect me because I know this is a period where my activity will be lower. And maybe for others, it'll be higher, right? But then maybe in the other environment, my activity will be higher and theirs will be lower because they're saying, volatility is not high. We're getting that breakdown here, that breakdown attempt. Yes, if ES cannot hold the 68 area, then we can't see the breakdown. But it's just range bound at the moment. I was going to add this. And back up. We remain range bound. So this is why I say I said earlier, the break away from the sort of micro wedge that we were forming can lead to a failed breakdown. Maybe that takes place here, but it's just range bound at the moment. Like, this is where you can really get chopped up, and you want to make sure that you have there's news in 3 minutes too, that you are have rules in place to allow you to have guardrails in this environment to minimize your trading activity if you are prone to getting stopped out a lot in this structure, trying to chase a break away from this range. And I'm talking to my aggressive traders. You guys know who you are. I know this is an area where you can get chopped up. So you really need to audit yourself and define rules to engage in this area. Yes, is stronger. Look at that. Hey, Regal. Thank you. Hope you're doing as good as well. So if it consolidates at the top of the bottom of the range, does that give you a bias as to which direction it may go? Yes, because that'll be a change in character, Jacob. What we're seeing right now is sort of ping pong back and forth. When that change in character occurs, price will form acceptance or sort of consolidate. And this sort of area is a change in structure because volatility in this microstructure, volatility has died down versus the back and forth in these swings, right? Think of this like a bull flag, and then think of a structure down here as a bear flag. On the daily chart, you would say, oh, yes, it's ready to break out, right? It's the same thing you're applying here. So until that happens, there's really no structure for me to engage on a directional push up higher. That means that on a breakout, like if we just sort of break and run, maybe on news, I still wouldn't have a setup and I still would be missing the move, right? But in reality, if my rules were not met, what did I really miss? Hopefully that answers your question. A retest of what? No, well, yes, I guess you can say looking for a retest when we sort of move up, let's say we move down, We bounce back up, retest, sure. What this indicates is that sellers are moving down from sort of here, news hitting the tape. Yeah. Sellers are moving lower to here, and they're not letting price bounce back up. And that is the change in character, is that sellers are not letting price back up. We form some consolidation here. It can be considered a retest, sure. And then the rejection away from that area, that is sort of where I look to enter. All right, so we may finally break down here. We're still in that range in SPY and QQQ, guys. Talking to you guys in the group. You guys know how I feel about these setups. We are gapping up. We're in a 1, 2, 3, 4, 5, 6, 7. We're developing a 9MA no trend in time on SPY and QQQ on the 5-minute. So this is getting ready for a move here. Let's see if there's let's see what we form here. ES is developing a much better wedge structure here. NQ is a little bit choppy. We're sort of more like a horizontal support. So we are contracting. We're getting ready for a move here. Let's see what takes place. Yeah, nothing so far. Let's get those likes up while we wait, yeah? You can always press the like button. All right, so it's attempting to break here. We have that possible breakdown in SPY and Qs. So let's see what happens here. My aggressive side wants to sort of short this. If we can form like a two, let's see what the 2-minute 9MA lower low, lower high is, and if that rejects, but we're still at that possible support area. But I do want to make note that, we are breaking a contraction here, which can really generate a good push lower. ES broke. Let me see, this is the wedge here. So that broke. NQ attempting to break here. Let's see how the bounce into a lower low, lower high looks like. And then I'll look to see if I can engage lower low, lower high. See if that broke here, that means our targets would be here. But we're still at that 440 support. And then all ES would be doing is coming down to that 5560 support. So let's see what takes place. If you did short that, fantastic. Look, you're coming up into 1R. Let's see how the lower low looks, lower high structure. I'm going to remove this. partial out if you are short. I'm still waiting to see what the lower low, lower high looks like. So ES is back into that 60 area, 55.60. Let's see if we can create a, let me remove this because I don't have a trade here, but let's see if we can create this sort of structure. Right now we're getting that bounce into that lower low, lower high, and want to see what the sort of reaction looks like here. If you're short, pay yourself, right? If you're hitting 1R, maybe 2R, where depending on where you took the short. I might try an aggressive short here, which is an entry once this 9 MA consolidation forms, and then I'll have my stop above sort of the 9 MA lower high, like here. Let me remove this. But let's see what happens here, because we're still at support, guys, and I have to respect that more. All right, here's that bounce into the 2-minute 9 MA lower high. I want to see if this is rejected, and then I'll look for an aggressive short here to see if we do push lower. If not, then we're probably going to reverse back up. But if you guys are short, fantastic. Pay yourselves because there's still a chance that we can. There's still a chance that we can bounce back up from here because we are just at support. All right, here's that 9 MA lower high. We're getting that bounce here. Let's see how it reacts. Either we bounce back up and go back into the range, or we are going to sort of reject. I'm still waiting for this sort of wedge structure, right? Don't get me wrong, but I think from an aggressive sort of standpoint, I'll look to engage on a short and see if that does sort of manifest to a continuation lower with a very tiny stop. Like I'm sort of participating in this 90 MA downtrend with a tight entry and stop, which can look something like this, right? So like that's a micro stop. Yes, is weaker. So let's see if we do get the next candle if it rejects, and then I'll look to engage on a short. So 9, 10. All right, we're rejecting from that sort of lower high area. If this next candle breaks lower, I'll look for an aggressive short. If not, we'll probably bounce back up. Where's my... All right, let me try that. Very tiny stop. I mean, this is, we can see if we do get continuation lower. If not, we're going to end up holding here and we're going to bounce back up to the range. So I have a, what do I have? 17-point risk, which is half of what I usually risk. And then if we do hold here, then we're probably can see a reversal back up, and then maybe I look to engage. Yeah, we're holding at the moment. All right, I'm going to try that reversal setup that I talked about. Why can't I get filled? Let's see if I get filled. So that short attempt was just to see if we would get continuation. We're not. Looks like we're getting back that reversion to the mean. I don't know if I'll get filled. Might go without me. But you can see that so far it is sort of failing. All right, I'm in with 14. We'll see if we do get that reversal back up. If not, the next structure for me is a sort of consolidation here. If we don't hold here, then we need to see this acceptance here in order to engage on like to get a really viable short. If this becomes a wedge structure here, then it will then allow me to look for a breakdown short, and then that would be sort of my next trade idea. But both ES and NQ are still at support. This is the area that really needs to break down for us to really get a move back to 360 in NQ and 64.43 in ES. Doesn't look like it. Oh, we're creating a lower high on the daily. All right, so I'm gonna take a stop. Let's see if we can get this structure here for me to then get a sustainable breakdown. If it goes without me, then I didn't really get the setup here to short, and I'm not gonna do that aggressive short again. You guys short? Will not short NQ above 425. I mean, yeah, it's attempting to break down, but ES is still at that 5560 area. It's strong support until, you know, it's not. Maybe we're seeing that breakdown here. We took out prior day high and reversed in Qs. And then in SPY, this is just a lower high. Six 443 is just a zone that I have for my indicator. If this goes lower, fantastic, guys. Write that. 360 would be the next target in NQ, and ES would be 6443. We'll see. Right now, it's in a 9MA downtrend, lower low, lower high, lower low. If it can create a wedge structure here, then I can look to engage. Let's see what the market decides to do. So let me show the plan again for today. So ES, the main idea here for ES was that we can come back down to 64.5560, the support area, which was resistance. You know, it was sort of support, resistance, support, this whole sort of structure here. Support, resistance chop. It was overnight support. Is it support again? And then does it hold and we bounce back up? Scenario one. If not, we really need to see acceptance or a contraction here in order to then lead to that move lower. A little bit of the same for NQ. It is a little bit weaker. And, you know, I tried that reversal being that it was at support. It's now breaking or it's attempting to break. If we can get a wedge or a contraction here, then that could give me a setup to participate in the move into 360 where we can see a bounce or into 280s. But, you know, ES is doing a much better job at holding this support area at 55.60. NQ is so far like undercutting it and have to see what takes place. Yes, getting that reversal back up. So there's really no follow through here to the move lower. So, you know, my reversion setup was failed. Maybe this second chance it does. We do not have an RSI divergence. RSI has a new low here. For ES, what about ES? ES does have a divergence here. So there may be a chance that ES does generate that bounce now. But so far, just a little bit sideways at that breakdown attempt. If we can sort of wedge up, then that can give us a better setup. But at the moment, yes, much better job at this sort of 60-55 area. So if you want to consider this as support, that's what it is. Where is green? Something like that. So it's still support. NQ hasn't undercut it. Let's see how we react here. If we can wedge up, then maybe we get a good setup here. So far, scenario one continues to play out. Bring this back up. Come back down to 55.60 NES and bounce. We're getting that bounce. Let me go to the 5-minute. Here's that bounce attempt right here. So we now need to see if we can sort of retrace all the way back up. NQ did undercut this 440s area. And now we want to see if it can traverse back up. Trading view is a little slow this morning. Let's see if the zones pop up. Here you go. So here's that 430, 440 zone. It is looking to hold. Now we need to see if it can bounce back up all the way here. Or if not, it'll contract. And then maybe at that point we wedge up and then have that breakdown. But so far, things are holding. And neither shorts or longs are getting sort of paid here. But I tried, that initial reversal, and you can see it failed on the first test. Maybe it goes now. No, I do not want to do that. What was the range? All right, getting that reversal. Yes, back up. If you took this additional reversal, then look to see if price will traverse back up. Yes, it's a strong bounce. That first reversal for me did stop me out. I didn't want to take the second one here. Looks like no wedge structure. We're getting that bounce. So it looks like it's going to go without me. If you guys are long and you caught this, then fantastic. Look to see if it can go to 1.5R. Back up into that sort of rejection here. MA, that's pretty much all I've traded here. Mostly rejections off a zone. That's the reversal setup that I talk about in trade. All right, so scenario one playing out here, guys. My first reversal attempt failed. I didn't go for the second one, and it's now moving up higher. So that's just the name of the game. It happens. First attempt here failed. And then made a new low. Yes, did make an RSI divergence, bouncing back up beautifully. And the NQ now on this next reversal here is getting that push up higher. Fantastic. If you caught that, great job. Here's that 4-hour look. Came into support, ES, bounced, NQ came into that support, bounced. So it's respecting the zones really well. I just didn't take that second reversal trade. No, MA, you need a way to manage your risk. You can't just short or go long on a test of a certain area. How can you manage that over 100 trades, right? How can you manage the risk on that? What if you take a short on the test of that zone and then it continues higher? So your short got stepped out, right? So you need a way for you to manage that risk consistently, to make it a sustainable approach of buying in and selling resistance or just key levels, zones. So a range bound day, we tested support. Yes, I just look for divergences for delta though. That's pretty much what I look at. Let's see what ES did. ES hit 1R. NQ hit 1.2 R, I would say, coming back down. Now to see if it can create a higher low. And then maybe here we get that wedge structure. If not, it can bounce back up to here and then reject. But back in the middle of the range, there's no setup for me. Whoa, that's not what I want. All right, so if you caught that reversal, that was a good chance to take partials up here at 1.2R or 1R simply. Yeah, it is choppy this morning. But it happens, you just, like I said, if this is a period of sort of low volume and activity, then it is, and you have to be okay with that, right? Like my strong environment is when we're in a one directional market, multi sort of day, multi-week. Maybe that's the same for you. Maybe you thrive in this environment and you're kicking butt. And for me, we did trigger that 90-minute reversal. It was perfect. We put in a second lower low one, lower low, high one, lower low two, and then reversed. So this was clean. I just didn't take it. On the 15-minute, I don't look at head and shoulders setups. Yeah, I don't look at that. I don't remember the last time I looked at that structure. See if it goes to 1.5R for you guys. Definitely not that. Perfect area to take partials and then see if it happens up here. Then once up here, look, I sort of, like I said, I wait for my rules. I missed this setup here. If we can form acceptance then now here, then that will allow me to engage on a breakout setup, similar to here on a breakdown setup. But in this range, there's nothing for me. One 1.5R here on that setup, if you took partials for sure. All right, if we can get up here, it's just me waiting to see if we can form acceptance here or form acceptance down here and to engage on a trade away. Maybe it happens later in the day and, I'll look to participate in that. Beautiful though. ES is leading. Financial should be, yeah. How are you guys doing? You guys long catching this? 2-second stop. ES just took out the high, so we have a good divergence here between ES and NQ. Let's see if ES can push up into this resistance area to take more partials if you got long, and then maybe at that point we reject back down. If not, we can form acceptance, and I'll look to see to engage. Nice, Starcade. 64.59 was your entry. Oh, that's good. Just ping-ponging back and forth. Semis are bouncing now. Oh, AVGO has earnings today. Chris, I took 3 small stops. First loss 7 points. NES. As long as your winner is helping you make more points, JD. Malcolm asked, how do you define acceptance? This sort of wedge structure when we consolidate. I mean, I went over it. I would say go back to the beginning of the stream and watch that, but it's pretty much just a consolidation. It ends up being a wedge structure. This could be better, either at resistance of a range or into a zone or into support of a range or into a zone below. That is sort of a changing character and allows you to understand that sellers are not, in this example, if we can hold up here for now, then that means buyers will step in from here to here and then take price higher. It will change the sort of ping-ponging effect that we've had here. If we sort of like fail to move back down, once we're reaching these highs, if we fail, then we're going to start holding here. And then that's a change in character. And that becomes acceptance of resistance and what can help you engage, what helps me engage in a move away from this structure. This beautiful reversal paid everybody, though. I don't like this one. Going into 2R here. If you took that, fantastic, get paid. We're entering the top of this resistance area, so we can finally pull back. Look at that, ES straight up. You guys are getting paid. Semi is going back up. That's helping big time. Yeah, big bounce. All right, so we're at the top of this resistance. Would not be surprised if we sort of cool down here and come back down. In order for me to engage, if we are going to create a sustainable move higher above this sort of area, I want to see a consolidation up here to help me create a way to manage risk on a long idea here. If not, we're going to come back down. All right, so I'm just gonna wait for a contraction here, guys, if we can get that. If not, we're just gonna, similar to this, we're gonna ping pong back down. Not really looking to short it because if we can hold up here, I'll be looking to get long that. Since everything has been staying higher since really this week, since that drop, we reclaimed strong resistance at 64.5560. We just back tested that once again. I think that's like the third time overnight. and then we bounce back up. So from here, since the 4 hours is bullish, hourly as well, can we continue higher? So let me share the hourly scenarios again. Scenario one was to pull back to support. We're now getting ready, or we're attempting that breakout higher. We're above London's high and sort of overnight highs. If we can hold up here, then we can push up into 64.93, which is the move that I'll be looking to participate in. Well, that's for ES and NQ. Scenario one was to backtest this 430s, 440s. We are bouncing from that. If we can hold here now at resistance and create sort of like a 2 or 5 minute wedge, then I will look to engage to get a move into 580s. But my main target is this 600, 630s area. As you can see, big resistance here. So if we can hold here, and go to the 5 minute, if we can form a sort of wedge here now, contraction, this can create the energy to get that move up here. And from a directional view, that is what I'll look to participate in away from this range, right? I need that acceptance to help me engage in that move higher. So for me, it's just a waiting game until the rules are met. All right, so we're getting that pullback here after going back up to resistance. If you did take this reversal long, this is the perfect area to take partials and then see how we pull back. And if we can create this wedge structure. If not, if there's no change in character, then we're just going to ping pong back down here, back here. So we really need to see if we're able to hold and get an opportunity for me to participate on a push higher. Gene, yes, reach out to learning@ninjatrader.com. I think that I do think that is there. Well, we are getting that pullback a little bit. Ski. Nice, Rogue. I didn't want to chase that higher low, but good for you. I don't use IB highs or lows. I should add them and see how they help. I've just never included them. Vincent, are you the Vincent that I know? That was in Barkey's room? No? Let's see if 23,400 counts as a pullback. I don't know what you mean by that. Ski bat. I think you're talking to yourself. All right, so if we can create this wedge structure here, that'll be a change in character. And it will allow me to manage risk on a long idea. If we sort of move back down, then we're going to continue this range bound structure. And I missed that next reversal setup, so I just have to wait. That's the name of the game, guys. Yeah, still is probably long here from where I was looking at. Probably has 425, I'm gonna say. All right, let's see if we can create a higher low here on the 15-minute and give us that wedge structure. That would set us up for a move higher. You have a divergence here. ES has made a new high and NQ has not. Holding so far in this pullback, ES is leading. Let me close this out. So maybe we get that setup that structure I'm looking for here, and then that can help me look for a long up here. So yeah, 73. Yeah, 70, 73 areas what needs to hold. SPY's leading. Financials are kicking butt. What's yeah, semis are on a roll today. Strong, strong, strong today. Choppy market though, regardless. All right, we have our 2-minute swing high, our 2-minute possible swing low. Can we now contract here? Let me remove this. And can we sort of wedge up? And see if there's an opportunity to contract. And this will be my next trade. If we can do something like this and set up a structure. Yeah, it's just range bound. Later, Sarcade. ES is leading higher. All right, we may have our swing high here. Or sorry, not our lower high. This is our swing high. This is the swing low. And let's see if we continue this contraction. But if we just go up higher, there's no setup for me to engage. If you got that reversal long from down here, fantastic. If you're in ES, that's paying you more at the moment. Yeah, ES is at weekly open and monthly open. You're right. We're sort of stuck here consolidating. That's really a good area for us to hold. If we can hold that, then yeah, higher for sure. But the hourly is strong. We just need to see how we hold this breakout attempt in ES above overnight highs, and Q still struggling at that sort of, it's still at prior day highs as well. So let's see if this is our swing, our lower high. And we can wedge up here now. So it looks really good. So I'm waiting for that here. If we can hold here, that'll be a change in character from the, push up higher, reversal, push up down lower, reversal higher. If we don't reverse back down, then like this, we can create our wedge structure, which I've been sharing. And then from here, this can create the energy for a breakout to 580s and then possibly that big resistance area at 600 to 630. But I have to wait. The lower indicator is delta, cumulative delta. All right. We're getting this. So if we can hold up here for a bit longer, then it can let me possibly get in, but it may fail. We're struggling at weekly and monthly open here in ES and NQ. So sorry, ES only. So we need that acceptance that we're possibly forming here now, but we need a wedge structure. ES has a solid one. Sorry, NQ. I keep getting them confused. All right, we're wedging up. Ideally, we get another pullback here. Something like this. Create a higher low, and then we get the breakout. But ES is still, struggling at that weekly, monthly open. So maybe this is a small acceptance, small form of acceptance to then break out through it. All right, getting tight. No pullback. There was a 5-minute divergence on NQ. Maybe we're going back down. I don't see a divergence. This is the last high. Technically, this is a higher high. I guess, if the same slope of degree, not there. So, if you want to call it maybe like an artificial divergence, I don't know if that's a term, but you guys in the group know what I'm talking about. All right, so we're just consolidating here, wedging up. I don't know if we'll have time for me to show the next trade here since I'm getting off soon. So still can pick it up and see where we go from here. But we're getting that next wedge setup that so far is a change in character, right? Push up higher, rejection. Push down lower, rejection. Push down higher, rejection. However, what is this? A higher low, and now we're holding. But for this to sort of lead higher, we need to break out of that, right? If not, we're going to reject back down. All right, we have our wedge here. Consolidating here for a move. On the 5-minute, we have a 1, 2, 3, just a regular 90-minute consolidation. We're close here. We're getting close to a move here. If this breaks to the downside, then this is just going to move back down to the bottom of this range. And it's probably going to frustrate everybody. Both are now wedging up. Do you ever take reversals just from the top of the bottom of the range? Do you just look to do? No, I just from the top or bottom. Yeah, I take reversals. That's what I show here. Do you ever take reversals just from the top to the bottom? But the sort of environment has to align the trend, higher time from trend structure. What's up, Stowe?
Good morning, Chris. Good morning, my friend. How are you?
Good. How about you?
Good. Doing good.
Where you long from? Everybody wants to know.
Yeah, that's always the fun question. Actually right here. In ES, not in NQ. Like you said, they're kind of behaving a little differently as far as the structure that I look at goes with my bands and things like that. This 520 ES guy sucked on the way back up before, so I feel like we're just running back into this super passive seller. I feel like I have to ask XY because I think we traded the most through this dude, but yeah, this seller has haunted me before, like many have.
Yeah.
So yeah, it's just grinding up against its previous day high, not making new highs, while ES, like you said, is forming some sort of acceptance up here above the overnight high. Yeah, I don't know. It's kind of a strange day. ES has played nicer than NQ has, that's for sure. NQ ran both its overnight high and low, which is a weird thing to do. That's uncommon. So anytime those little stat outliers show up, I kind of just have my head on a swivel. But I'm sticking to ES today because it's been nicer to me the last couple of weeks.
Cool, man.
How about you? You're trying to get it up here too, right? If you see some
yeah, we're getting that acceptance structure, which to me is just like a change in character from going, ping-ponging back and forth.
Yeah.
We're sort of holding now this resistance area, so we're hugging it. So to me, that's acceptance.
Yeah.
And so my directional setup is the break of that sort of contraction because that to me, that contraction will create a sustainable move higher. And hopefully that happens here. We both see something similar.
Yep.
So
yeah, this your wedge is basically my red team, blue team thing that I look at. So yeah, seller here, buyer here. What are we doing? Seller wins, we're back in the range. Buyer wins, we're climbing higher. But monthly open too. That is always a pain. Yeah, look. So there's also been on the NQ ladder today. There has been this 100 lot person that is doing. Oh, they finally got filled. So they've been flashing 500 lot increments to the upside, Every time we've gotten to them so far until just now, they have not taken that fill. But on ES, after this initial run lower, a couple big icebergs, big buys offers that got lifted here at 66 and at 70. So I'm still leaning higher as long as those hold.
What targets are you looking for?
Right now, I just have. Yeah, I don't really have anything other than this monthly open on ES. So I'm kind of like I've kind of maxed out my idea. If we get above this, then I guess I'm looking for 6502.
6502. Oh, you're ES. You're trading ES. Let me go.
Yeah,
yes. Yes.
Yeah, I aged quite a bit in the last couple weeks, Chris. Now I'm very old, and now I trade ES.
I see that level. I have 6493 as well above us.
Okay, that's cool. I do not have that at all, so I'll keep that in mind. Thank you. No, that's good. I'll take level advice all day from traders that I trust and I know are great. So thank you. Yep, 64.93. I'll draw the crayon. Yeah, we're getting that. ES made new high, right? Yeah, by a tick.
Yeah,
And
they're both
NQ's trying to
yeah.
figure it out too.
We'll see if we get it. I mean, we can just easily go back into the range, but so far so good. It looks good. I mean, so far, per my setup, we already hit 1R. Too soon for me to take partials here on a potential move higher, but we'll see.
Man, there's a lot of delta on this. I'll switch back to NQ so I can show what's going on up here. Yeah, this guy. So this is why I like to have the delta volume profile, just so I can really zone into that exact price area and what it's doing. And this is a lot of offer that got lifted here, and here also. So the delta story between ES and NQ is a little different. This was two-way consolidation here.
Yeah.
On NQ, it's just been just a passive seller that eventually got ground through, and now he's got another lot, 400 lots at 538. Actually, 420 lots. I like to think that there's someone that has programmed these algorithms to make jokes like that for those of us that watch the Dom. So, yeah, 420 guy, if you're out there, I see you.
What target you looking for? You have partials here at 83, 82, 75.
Yeah, I'm just gonna keep. This is just wherever. I don't have anything. I've only got one lot left. I took.
Oh, you're already partialed out.
Yeah, so I take 5 points for the core on ES. I bailed out of. So I started with 3 lots. I kicked off of one here, just to de-risk because this was taking a long time. I've been in this trade since. I guess it's not that long, 1050. But yeah, then 5 points here. 64.79, and then we'll just see what the runner wants to do. I don't know.
Yeah, we'll see. But all right, my friend, I'll let you take over. We'll see if we do get that push up higher or not. Maybe it fails. We go back down. But we'll see. You enjoy your weekend, all right?
All right, brother. You too. Thanks, man.
All right, you guys take care.
Yeah, Cooper. Good session, Chris. Give it up for Chris, everybody. Give it up for Chris. All right. Good morning, chat. Good morning. 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 How is it going? Give one like for Chris. Yeah, fly here. NQ's doing, NQ seems a little more unhappy over there. Let's see. All right, let me make sure I got my position tracker right. There we go. Yeah, so let's flip back to NQ here. So I like to look at both, So let's tell the story with both. Let's start with, actually, this is cool. I'll expand on this a little more. All right, so we look at, the London 30-second opening range. Yeah, it is a nice little slow long, isn't it? Sorry, I'm just watching. I want to see if this 538 guy gets filled. Sorry, I'm getting ahead of myself. I'll do the whole London OR rigmarole later. That's fine. We don't need to do that right now. Let's watch. All right, so we're watching 538, which is like right in here. So this little blank space, we'll see. Yep, filled. Nice. Cool. Yeah, so that's a big offer that got lifted. Doesn't mean anything. It's just resting liquidity. Literally means nothing. Except, what's price going to do after this? Is it going to keep lifting offers beyond this? Is it going to slow down? Are buyers going to give up right here? So yeah, that's all we can really glean from that. Yes, still cruising. It's holding its monthly open for now. Which is right here at 64.79. I'm right here, Mark. Where are you? Good morning, Mark. What's up, homie? Zelino, I was long. If you want to do the whole recap for ES, yeah, that might have been exhaustive. So we see NQ faded pretty hard off of that. Now it's still, this is again, nothing to really read into because right now we're still looking for this trend to hold, right? So we're in VWAP sloping up. Buyers are buying up here, all kinds of stuff going on. So like, I'm not freaking out yet. ES is just meandering around. It likes to take its time as well, but its VWAP band is sloping up as well. So we're just gonna chill. Nothing to get weird about. Hey, undercover scammers. Good morning. Morning, Dr. Steve. You're gonna be waiting a while, undercover scammers. Maybe I'll make a mentorship just for you, but it will be about you can choose. It can be about gambling or baking bread. It can't be about trading. I don't do trading mentorships, but I do gambling mentorships and bread baking mentorships. So I'll let you decide. The kid wants to make the video this weekend, so I think we'll do it. I think we'll make the pizza bread video. No, you can't gamble and have bread at the same time, Patch. Oh, Wagos, it was awesome. Yeah, I went to a Pirates game last night. It was amazing. Also went to the casino. Had a real good time. Saw my real life friends in the real life world. I don't know if you guys know this, but there is a world out there that's not the internet. It's super sick. You should always make sure to check it out every now and again to make sure that you know that it's still there. Yes, I was a brewmaster. I still know how to brew for sure. I haven't done that in a long time, but I could probably teach that. It's pretty easy. If you like, you don't even have to like beer to like making it. If you like chemistry and physics and plumbing, you would love to be a brewer because most of it is plumbing and then physics and then chemistry in that order. Hey, Fig. Good morning, homie. Yeah, Fat Fish. We do. We do have such great pitching. Um, we're like 3 bats away, honestly. I don't know. I don't know if they can get it done. They've never. So as a Pirates fan, it's very discouraging to have such good pitching and know for a fact that like we will never spend the money ever. to get the bats that we need. Like, we're just priced out of the market because we're such a small market team. And it's not that small market teams can't compete. I mean, Milwaukee is a small market team. They just choose to spend money. We choose not to spend money. I like the Brewers. So, like, if I have to go with an NL Central team once it's time to get to the playoffs, I go to the Brewers. I will die before I root for the Cubs. Know this. Know this. I think me and Pax agree on that. I think Pax mentioned that also he would die before he rooted for the Cubs. All right, now this seller's trying to do something. This is annoying. Stepping on my trend. Ooh, that was violent. Runner might get stopped here. Very violent move in NQ. Let me flip back. Yeah. Nasty. Right at that mid, though. I'm not trying to buy this right now on NQ. Ha! Runner survived. All right. Let's throw him back on. I will cut this. Yep, good spot. Great spot. Good spot for a stop. 2-tick stop. Is that cool? Am I a boomer now? With a 2-tick stop? Phoenix, that's funny. I just read, yes, we did fill those to the tick. And ES likes to do a lot of stuff to the tick. So it's like, that is the one hard thing with transitioning from looking at NQ all the time to looking at ES all the time is NQ's kind of mean. Like, NQ's pretty nasty. It does not do things to the tick at all. But ES will occasionally do things to the tick. So, like, I don't know. I can kind of trust ES a little more than NQ to be at specific prices and respond there. I mean, it snapped the IB to the tick. That's crazy. Who does that? Not NQ. That's for sure. Yeah, back above this monthly open though. I mean, it's Thursday. NQ's back in its range here, so I don't know if this is going to keep going. I don't know if we're going to get any more trend out of this today. Yikes. NQ is so mad. Somebody must have said something extremely sad about technology just now. Just to the tick again at the IB. Wild. I mean, I don't know if there was news. I don't know, Nick. I do not know. He is very he's trying to party. This guy's like, I don't care. I don't care what horrible thing was just said about technology. We are holding the IB. We are a brick wall. Cool. All right. Maybe that was just like, yeah. Just a little liquidation party on NQ. All right. So we got our half off again. I'm going to keep the stop here. What do I got? Make sure my risk reward ratio is good. It's fine. Okay. Cool. Yeah, fly here. Yes, I mentioned that as well. I would like to figure out that stat a little more. Flat here just mentioned, NQ ran overnight high and overnight low, and that is, an uncommon scenario. I would like to figure out, maybe you can help me with this. I would like to figure out if there is a way to quantify that stat and narrow it down based on like the size of the overnight range comparable to RTH ATR, or maybe I just need to make maybe I just need an ADR of Globex, and then I can do a ratio based on that. And so if it's below a certain threshold, I discount that overnight high and overnight low stat and then narrow it down even further. Because that's the thing with stats. You want to try to find, ways to narrow it down with more context, because the stat's pretty useless without context. Hey, good morning. Good morning, Kane. Yes, call me stove, not the oven. Yeah, Curtis, I'm also not trying to trade like crazy today. As my great friend and mentor Jim would say, last night's session went into overtime, so old Stowe might be taking a little couch nap after this. Yeah. All right. Cool. So our stop's in a good place. I guess I can give it like one more tick. There we go. Cool. Oh, I'm sorry. I missed some baseball talk. Ooh. What was that? Somebody's doing something up here. Somebody's doing a little work. Let's see if that was exhaustive. I don't think it was. There's still plenty of volume up there on that spike. So not turning around just yet. It's happening. Is that clip? I was trying to figure out where that clip was from. Was that when I won the bet? I think that was when I won the bet, right? That was a good day. That was a good day. It ain't often I get one over on the big cat. So I relish them. I relish those times. Oh, it's happening. Let's go. We have fun. It's important to have fun. If you're going to do this, I think it's important to have fun. It's important not to take yourself too seriously. It's important to, visit the real world from time to time. Remember that your real friends exist. They all, my real friends, they're like, so how's your podcast? And all I could think, I was like, oh my God, you're just like Nick's mother-in-law and Leo's mother-in-law. They're just like, so how's the podcast going? That was so good. I was like, it's going great, guys. I don't try to explain what the hell any of this stuff is to normal people. It's just like, it's not worth it. There's no reason to try. That's right, Nick. It's just I am just in one giant podcast. Everything I'm doing is a podcast. This is a podcast. Then I'll make an actual podcast. If I talk to my wife on the phone, that's probably a podcast. Yeah, how's your talk show with your friends? That's kind of what it is. It's kind of what I'm doing. Dan, do you seriously take a nap every day? That's the life, bro. Nice job. That's cool. I struggle to take a nap, honestly. It has to be like I have to be really tired because there's just like my brain doesn't turn off. I have a hard time just falling asleep in general, let alone taking a nap. So okay, yeah, dab naps that would help. I don't do the dabs. No dabs for me. Oh, thanks. Hey, PNW Life. You know what it's like to chill. Everybody I know from the Pacific Northwest is chill. I think it's very similar to Pennsylvania. Whenever I've been to, Washington, Oregon, I'm always like, this feels like I'm back, because you cross the country and you get into like, I don't know, if you're going through the Badlands, you basically like go across Mars and then you show back up in, it's like after Spokane, like you climb the mountain and then you get back down and, you're getting into Seattle-ish. I start to feel like, this is nice. It's rainy. It's dark. It's got pine trees. This is what I know. This is where I'm comfortable. Oh, sure. Let me switch to NQ. Yeah, if you guys want to see different stuff. Yeah, so here's the volume profile for NQ. We are still, this is why I look at this thing. We are still in the entire leg from the low. So, ooh, nice. Still going. Woo! We are still in. Okay, so we just broke the IB on NQ. So that's stat. Check. We've done that on ES. Check. They've both broken an overnight high or low. NQ did both. So check, check. Omni, I can't help you. You're shorting the Dow. Do you hate America? What is wrong with you? You'd never short the Chad Dow. Never. The Dow is banks and toilet paper. Everybody needs those things. That's what I'm saying, fat fish. That's what I'm saying. How could you short something that everyone needs and uses at all times? It was good, Omni. It was good. Now, Dr. Steve, Omni's got very systematic trading rules. He takes what he takes. He knows what he's doing. The game was so sick. But yeah, whoever asked for the Delta volume profile, this is what we're up to up here. It's just buying. We're just buying the hell out of this. There is yet another 400 lot order at 548. They only filled 92 of them on that last spike. So there's still 300 or so sitting there, 320 still sitting up here. They did not quite get that full fill. Yeah, but it's just grinding around. Sorry, Omni. You know what I mean. You got it. Omni does math. He knows what he's doing. That is kind of why I just click buy every morning, to be honest. The more I think I'm better served, figuring out your own style of trading, very important. Everybody goes through like all this different stuff, and there's like, I don't know, there's very formulaic and kind of like, I don't know, sometimes tropey ways of looking at like trader psychology or trade review and all this stuff. Yeah, not everybody needs that. You need it to a degree, but like it's not going to look the same for everybody. So, I struggled, man. What was this like? This might have been on the show, but for example, when I called the top by accidentally saying I'm never going to short again, that was after a year of really struggling with short setups, right? And actually, Omni was one of the people that made me think about this probably a year ago. I don't know if you remember this, Omni, but he just said, "Do you ever think about maybe just not trying to play the short setups and like just don't be long?" And so that's what I've been working on it all summer. And definitely now as we're getting volatility back, I don't have to trade the short side. Like I don't have to. I don't have to do anything. That's the beauty of being me. Like I'm an independent trader. I can trade or not. There's nobody looking over my shoulder. And that's what I love. That's what's important to me. So I've just stopped taking, like, if I see a day that has a short setup, instead of trying to figure out how to get into it, getting banged around, I'm just not really taking those. I think it saves me money in the long run. And saving money, knowing when not to trade, knowing when not to take expenses or lose money, however you want to frame that, I feel like that's positive expected value, right? So yeah, you guys have been watching me work through that. And it's funny because we're like, oh, where's Stowe long from? Because that's really all I'm trying to do. I'm good at it. This is what I'm good at. Like I'll go through the ES stuff today. This is a great example. I took a short today and then was just like, this is ridiculous. What am I doing? All right. So ES sets up. Let's do the review too. So we're looking at the 30-second London opening range. They are 100% long off of it. NQ, same story. God, where the hell is it? I don't know why my NQ one disappears. You're just going to have to trust me. Anyway, so here we are, 3 a.m. London, totally long. This is Kane. Kane's partying. Kane just presses by. This is Kane's secret alpha. He's going to kill me for sharing this. He just smashes long or short off of whatever London does at the open. And then he goes back to sleep. And then he sells it all back to us at the 11:30 candle or whatever that reversal is he plays. So Kane's only shared half of his strat where he sells it all back. The first half of the strat is when he buys it all to begin with to sell it back to America. Anyway, none of that's true. I'm just joking around. So long off of this, ES opens, chop, and then opening drive higher. Okay. We ran the overnight high. Okay. Pulled back. It's just kind of chopping around. With ES, I'm, a little more careful. I didn't even come into my office until after 9:45. This is another trick I've been doing. So whenever there's a 9:45 announcement, news drop, whatever, if I'm watching the open and I know there's a news event in 15 minutes and a trade sets up in those 15 minutes, it kind of creates this it creates a like a sense of urgency for that trade that doesn't necessarily that is toxic and doesn't exist except in my mind, because I know I need to be flat for 9:45, right? So I don't get banged around in some news drop. So instead of trying to figure out how to cram a trade idea into this tiny window, what I've been doing is I just sit on the couch until 9:45. So I don't see anything. And that's just, something I've done for myself. It's normally on Thursdays. So anyway, 9:45 comes and goes. Nothing weird happened. I get in here. I'm like, okay, we ran overnight high. Now we're just chopping around. ES dies down into this spot. And, I use this as a pivot. I see buyers come in here. I get long right here at 64.61. I get 2 off, bang, bang. And then I take a full stop on this. This is mismanaged. I should have tucked this stop under here. But my cat knocked over a vase and I needed to go figure that out. So that's on me. Then we got up here And at this point, I'm looking for short continuation off of this OR low. It rejected a couple times here. It got ran through. So now this is the setup. So I took a very small stop here. Let's see, 62 to 64. So I took a 2-point stop here on this idea because it was either going to work right away or this was gonna explode. So, and then it did. There's really no opportunity for me to get long in here because I guess it would have been here. There wasn't any real pullback to this prime location. I'm not trying to engage in the middle of this because, I mean, by then the point of control was right there. Yeah, so I'm just chilling. We get up into this +1 and you see the slope start. I'm like, okay, cool. We're starting to make some progress. So that's when I get in here at the IB retest. And yeah, now you can see I'm just scaling out 1, 2, bought another one, sold it. Now I'm back down to 1. Then yeah, I'm just going to hold this and see what happens. But yeah, I'm not really taking any short opportunities unless I can really hone in and define them with a tight, like abnormally small stop, like not room to work. This is either going to work right now or not. So yeah. Paulo, yeah, that's funny. I appreciate that you're willing to fly to hang out with me. But no, I shan't be anyone's mentor except for a 5-year-old who doesn't listen to me. It's just not in the cards. I don't smoke anything, John. So like dabs are out for me. I mean, I vape occasionally if like I'm in a pinch, like if I'm in the world, then that's the only way to get my medicine going. But typically I'm just like a very low dose edible dude, tincture guy. That's true, Jose. I'm a secret mentor. I mean, Pablo, if you're joking, I assume, or Paulo, I assume you're joking. But like, dude, I'm trading right now. Like, you don't have to fly anywhere. You can just watch this. This is what I would be doing anyway. Like at noon, I'm gonna turn this big light off and close 2 of these screens, but I'm still gonna be standing here. Except I do take my headphones off. I guess that's the only difference. Yeah, this is a family show. Hey, MA, it's medicine. It's medicine, bro. I got a prescription. And it's not for more cowbell. Hey, Paris. I am on, so I don't use the time frame chart. I use volume-based candles. And for ES, I use 3,000 volume. And for NQ, I use, oops. Let's get back to where NQ is partying. And for NQ, I use 750 volume candles. Possible, Curtis. Fair enough. I would. Recovery time with more cowbell, unmatched. Unmatched. Dude, Omni, the charms work. Do you guys want to see? I mean, there's so many of them. There's so many. All right, so this is OG. This is business duck. He's important. He's extremely powerful. This is, I guess, cop duck. I think this is this is either like a traffic cop or like possibly might be a sailboat captain. I don't know. Is that guy? Football duck. Football Sunday's coming. That's going to be cool. So we got football duck. And, oh, yeah. And then this is just green duck with stars. He doesn't have an occupation. He just gets to be whimsical and do whatever he wants to do. And every morning, this is ridiculous, but this is what happens. Every morning, my kid comes in here and I'm setting up my stuff because I get it all ready before I take her to the bus stop. And she says, "Do you want me to power up the charms today?" And she powers them up like this. And then she puts them where they go. And that's how you know. So like every morning they get recharged. That's also part of the charms. You got to power them up, Omni. Dude, Business Duck is cool. That's so funny. I love Business Duck. No, Tyler, I am not a Jeep guy. Not a Jeep guy. Nothing against it. Every time I've driven one, I feel like the hood is very big. That's also my complaint with most trucks, too. I'm like, how the hell am I seeing over this? I imagine that's what it's like to like sail a boat. Damon asks, how did I come to that ES volume level for my candles? Yeah, I don't know if ES volume is usually 2x NQ. I just the candle volume stuff that's just all feel for me, and this is just like this is the speed that feels comfortable for me for ES. It could be a little lower, but I have put it down to 2000, and I feel like it's rushing me a little bit, and it is noisier. So I did do that last weekend. I think it was last weekend. Yeah, I did that last weekend, and I just determined that it was too quick. Who said that? Hold on. Who said duck butt kiss? Fat fish. That's great, man. Duck butt kiss. That's so funny. Ah. Cooper, it might be black magic. I don't know. My kid could be up to that. I wouldn't put it past her. Wouldn't put it past her at all. Who knows what she's up to? I'm just along for the ride. The girls are in charge most days. I mean, every day, actually. Hey, Ferry, good morning. Well, we went to, no, Johnny, I can't sell them because they're mine. But we went to Ocean City, and that's in Ocean City, Maryland. There's like ducks. That's like the thing. That's like that town's thing. That and crabs. But for some reason, like everywhere we went, there was a duck. Also, the big thing that they have there are seagulls with French fries, stuffed seagulls with French fries in their mouths. Because if you get those French fries from Thrasher Fries, you're going to be immediately assaulted by every seagull that is in the area. Horse and buggy. No, John. I drive a 2010 Toyota Prius. Thank you. Best car in the world. Yeah, dude. I'm a vinegar fry guy too. Enro asks, why do I prefer volume candles rather than time or trade? It's close to tick. It's close. Most of the stuff that a lot of the studies that we use also work off of volume. So there's some overlap there with what we're using to see, the delta map that changes the candlestick colors, all those different things. But I like volume just because it speeds up and slows down, and I can feel that out. So it's kind of like pace of tape a little bit reflected in the candles. That's how it feels anyways. So like, I don't know, this move down here, this was faster than this move right now, right? So like it's slowing down. You can feel it slowing down. You can feel it speeding up. That's when you know, like, oh, is something like, did an outlier thing just happen? Yeah. So it's just all personal preference and feel. I know that. I mean, lots of people use different things. XY is still using a 5-minute chart a lot too. So we all trade different stuff. You use 5K vol, Jeff. My word. You're trying to put yourself to sleep. Hey, sure, Enro. No problem, brother. No problem. Or sister. I don't know. I don't want to assume anybody's YouTube gender. Yeah, Jose. I switch. Well, I'm trading both. I switched it and to ES for the show. I mean, I always trade both, but I don't know. We were all trading NQ. I was only ever trading NQ. Since I'm also comfortable trading ES, there's no reason not to switch. Also, I found I'm getting really good rotations. I'm able to manage stops a little better. Yeah, lots of reasons. It just has become more comfortable over the last month. But I also wanted to showcase it as well, just because we don't need to constantly look at the same stuff. You guys should get to see ES if you want, NQ if you want. So yeah, just figure we switch it up. Steven Siegel. Build back broker. Nice one. Nice one. You guys are crushing the guys are crushing the Ocean City puns today. Oh man. Whoa, sick. Jim Lannon, do you seriously have a 2010 Prius? Amazing. Congratulations. It's just you and me, I think. We're the only two. Hey, XY. Good morning, brother. Ooh, Dr. Steve, 300 tick for NQ. That's quick. That's quick. Those are crack prices. XY, you missed it. I showed everybody my Lucky Charms. It sounded different than I intended it to. My bad. There's not really much to do, huh? Hey, Phoenix. Thank you for your question. I was just about to ask. Does anybody have any questions? Hey, so going back to talking about those big offers that we've seen all day, is there a difference for you when those are filled versus pulled? Not really. I feel like, well, I don't want to start reading into I don't want to start reading into the behavior of resting liquidity because I am universally opposed to doing that. I don't think anybody should do that. I don't think it means anything quantifiable or tradable because there's no way to know the intention of anybody's position in the market that isn't yours. So I don't want to get too into the weeds with it. I will note it, especially if they're moving around. Like if they're trying not to get filled, that's interesting to me. sometimes, it'll flash. This is more about NQ than ES. This doesn't really happen on ES. But they'll flash, 50 lots, 100 lots, pull it off, move it higher. And if price is like jumping in that direction, I don't know, that gives me, or if we get up to that spot and they pull and then we blast through and keep going versus blast through and reverse, sometimes that's a good sign of exhaustion or continuation. Because it's not about, and again, this is all anecdotal, just goofy observation, but it's not about the resting liquidity itself. It's about the market response and the market orders response to viewing that resting liquidity on the book. So if the market wants to go get it and they go up there and it pulls and the market keeps going, that's a sign of strength. It's the same as if the market went to that price and there wasn't resting liquidity there and it keeps going, it's still a sign of strength. Or if the market goes up to it, blasts through it when they pull, and then fades, that means that buyers didn't want to go higher than that spot. So that can be exhaustive. So I guess that's what I'll say about resting liquidity. It is interesting to look at, just from a sport point of view. But then I would caution anybody to not give it any credence because it is just resting liquidity, and that doesn't move a market. Market orders move the market. So the thing you should be paying attention to is what is the reaction of market orders to that resting liquidity. Also, hi, Glenn. Good morning. Good morning. Good morning. Yeah, I don't know. Spoofing. It's not spoofing. It's just algorithms, and nobody gets in trouble for that. It's whatever. It's not like spoofing is such a weird a term. It's been used way too much to describe like market manipulation behavior, and it's just like it's not a tradable thing for me. So I don't think about it. I don't think about anything that's not tradable, to be honest. So I don't look for spoofing. I'm not trying to figure out if something is a spoof. These are all computer programs, right? Like these aren't real humans like clicking buttons manually. So I don't know if the program is thinking about something and then it stops thinking about it. Is that spoofing? I don't know. I agree, Regal. Yes. Spoofing is a boogeyman. Spoofing is something that a lot of people, I mean, it's real, but it's been used in the context of like, ooh, the white van so many times that we can't even talk about it without it being like, you start to get into conspiracy theory shit like right away. And that's just not helpful for me to trade. Larry, that was so rude. Oh, you want to see the business duck? Sure, XY. Here he is, homie. Good morning. Good morning from Business Duck. May Business Duck bring you all prosperity today. Larry, I don't understand your question, though. I would love to answer it because you're my bud. Stowe, you're back today. Emotionally speaking, I was wondering what you did to get over yourself after yesterday. Well, yesterday I didn't trade. Are you talking about Tuesday? That's fine. We can do a business duck blessing. Absolutely. Larry, if you're talking about Tuesday, I'll explain, but just clarify your question for me, brother, please. No, Mark, I don't use Bookmap. For what? I just look at it. I just see it on the DOM. I mean, Bookmap is just a DOM that they, have made very colorful. But it's essentially just a DOM. Oh, Tuesday. Okay. Yeah, Larry. Yeah, Tuesday bummed me out for sure. and it sucked. I got really into my feelings about Tuesday for a lot of reasons. The thing I did to pull myself out of it was, number one, I went back and looked at those trade fills later in the day, and it wasn't that bad. Oftentimes, I have a problem with giving myself, and also my friends help a lot with this. It's really, really, really important to have not just trader friends, but like traders who are your actual friends. I can't say enough about the amount of times that Leo, Nick, XY, many other dudes, Kane, have all been there for me from a friend point of view about trading, but they don't have any, there's no ulterior motive for them there other than just like being my bud. And like, truly, I love those dudes. So I'm very blessed to have them in my life, and they helped me with this too. So what happened Tuesday is I had a play set up that I have often, and I don't like to share P&L, but when this day type sets up, it's very common for me to have a 5-figure day, which is a lot for a trader my size. That is a big outsized day. And the way that I make money in the market is with base hits and occasional, like maybe once a month, once every 2 months, sometimes twice a month. It happened in March. It happened twice. That was awesome. I will make a big chunk of change off of one specific trend setup. And the setup's very common. It's like we get a big overnight sell-off that's emotional. It's never, this could probably also work in the opposite direction, but because I'm not good at shorting, I don't have that setup. So this is the setup. We get a big overnight sell-off that is extremely emotional. It makes an exhaustive low pre-market. We open up. Shit, let me see if I can just find it. I don't know if I have enough days loaded to see it. No, it's only going back to Wednesday. Damn it. Anyway, overnight low, exhaustive pre-market. We run that and immediately bid, like hardcore bid off of the overnight low stop run. Now, I am always in the long on that overnight low stop run anyways, but when we get that massive bid out of there, and you can go back and look at it, I'll try to find it and post it on Twitter. When we get a massive bid out of there like that, I am always, always, always going to be pressing longs at the top of that range. Now, what happened is I gave back all of my day. So I made about 25 points in ES on that and gave it all back and then lost. And then I lost about 15 points. So I went from, being up $1,230, $1,250 to down, I think I ended down like $800 on the day. And that, when I was doing my review and when I was super bummed out about this, and my friends pointed this out to me, this is why it's important to have friends in your life that can help you with trading stuff. If it's basically that, I was upset that I lost the money that I made. I was being extremely results oriented. I was not focused on the setup itself. I was not focused on the fact that I did trade a setup that I have traded many times to outsized returns. And so basically what happened is I took a setup, it didn't work. I got emotionally involved in it because I gave back money, but that is just me being emotionally involved in that part of the process when I shouldn't be. What I should be happy with is I took that trade and it worked. It worked. It started. The whole setup was there. I didn't deviate from that. A couple of those ads were early, but like That's also hindsight when you're digging into that stuff too. And, just the same way that like gurus on the internet can hindsight you and say, oh, well, look at this level I called after the fact. You can do that with yourself too, where, you look back at your chart at the end of the day and you're doing a trade review. And then all of a sudden it's like, well, this ad was early. It's like, was it? Because is it only early because you're looking at it from the lens of the future as opposed to the lens of the moment? Like if that ad was the bottom of that pullback and you're looking at it from the lens of the future, like it worked, are you still going to say that's an early ad? Shit like that. So there's lots of ways you can mess with yourself, getting too in the weeds with being critical about yourself and reviews and things. So that's what I did to get out of Tuesday. I didn't do that bad of a job. I did a fine job. I lost $800 on a day when I could have made $10,000 typically. So, and that's a trade I'll take every time. I will always take that trade. I didn't violate my risk rules. I didn't oversize. I didn't revenge trade to try to get that money back later in the day. And that's kind of what all of the Tuesday show was about, was this trade setup has failed. I'm not going to revenge trade it from the point of view of the other side now that that setup's gone. So I didn't chase it once it had failed. So ultimately it was a process win. I don't know. I hope that answered your question, Larry. Also, never worry about being rude to me. I know you're cool. And also, you guys can say whatever you want to say in the chat. That's what I'm here for, baby. Yeah, I was bummed out, Larry, for sure. But it'll happen. Hey, you're welcome, Phoenix. I appreciate you. I'm glad that was helpful. I say this all the time. That's why you got to give yourself grace. And this game will mess with you in ways that like you can't even imagine. So you have to be kind to yourself in those moments. Give yourself grace in those moments, because if you don't, it can become a spiral that is really, really toxic and really negative. And it doesn't matter how much money you make. If your life is miserable, it doesn't matter. It doesn't matter. You can't spend this shit when you're dead, number one. I don't think so anyway. I mean, I guess you could like freeze your head and you could wake up in Futurama if you wanted to do that. Maybe someday that'll be possible. But the point is, still can't get over this. Now we got a poor high up here. I'm 55. But the point is, be kind to yourself. Realize that this is an imperfect game. You're not going to be right all the time. You have to take bets that make sense. And as long as you're doing that and stick to your process, be nice to people. That's really all you can do in this world. Hey, no problem, Larry. I appreciate you, homie. That's very well said, XY. Yes. Hey, Splug. Good morning, homie. Day's good. It turned into a little trendy trend up here, so we're just cruising with it. Got some points. I remember Tuesday morning like it was just a couple days ago. I know, right? Weird. Oh, Fractal. Okay. Fractal says, good morning, buddy, by the way. Fractal says, Stowe, I had a similar thing. Let me make sure I'm not. Okay, I got 1 minute left. I'm going to answer Francel's. All right, hold on. Let's do this real quick. I got 1 minute left. I'm going to answer Fractal's question and then bail. I forget that Jim's not going to come tap me on the shoulder. So, yeah. Anyway, Stowe, I had a similar thing happen today. I got very bummed out over a loss. But when I went back over the trade, it was just statistical, and that's all she wrote. That's right. You're going to lose. You're going to lose. I do my best work with a 55% win rate. That is 45% losing. It's hard to remember that. Your brain doesn't want you to remember that. But you have to remind yourself, this game is about losing. I do miss Jim. But yeah, it is noon. My producer friends need to go get a sandwich. I need to go get a sandwich. I need to hydrate a little bit. I will be back with the big cat at 2:30. And yeah, thank you so much, guys. I really appreciate you all so much. I mean that. And yeah, I'll see you this afternoon. Peace, chat.